London, and here are your top stories. European stock futures advance as the S&P 500 snaps a four-day decline. Japanese two-year yields rise above zero for the first time since 2015, while the yen slips following yesterday's momentous surge. Stepping down, Elon Musk confirms he will resign as Twitter chief executive after finding a successor. The billionaire says he will still run the company's engineering teams. Plus, data release while a House committee votes to release Donald Trump's tax information to the public, capping a three-year legal tussle over the former president's finances. Now, to the markets, I have to disappoint because it's not quite as exciting as yesterday, although I did hear that quite a lot of traders were hiding under their desks yesterday after having the wrong call on yen and JGBs. Your futures, for the moment, your stocks 50 futures actually gaining 0.6%. So marks opening as we speak. Let's see as they settle down, but there does seem to be an update. After 4 days of losses, the S&P 500 in the U.S. also saw gains. Now, there does seem to be a bit of a moment of respite. Volumes are quite thin compared to previous weeks, but this is partly because of some data that we've seen elsewhere, but also in general, it's basically just the fact that, traders are on guard for the prospect of Japanese institutions repatriating money held abroad, but that hasn't quite happened yet, so it will take a couple of weeks for that to play out. The CAC 40 over in France gains 0.3%. IBEX, we're also seeing similar gains. Let's get on to some of the U.S. 10-year and look at some of the cross assets. Again, one of the things that we're watching out for is, of course, the 10-year Treasury yield rising slightly after jumping some 10 basis points for the second consecutive session. This is overall what we're looking at, 36787, and then yen 131.76. Now let's get over to our Bloomberg MLive managing editor. He's Mark Cudmore. He's had to be sedated after that BOJ news. And Mark, you're looking, of course, at the decline of negative yields.
Yes, Fran, you said it's quieter today. It's a lot quieter today. Christmas markets have started. That means that this really should be a cooking show today. That's what Danny and I did the last show. Not that I'm not trying to make any bad suggestions. I want to hear your favorite Christmas dish, Fran, and what you'll be cooking. Anyway, talking about markets briefly, non-interesting markets. This is the chart of negative yielding debt going back over the last couple of years. Now, about 2 years ago, where have I gotten this chart here? Yeah, 2 years ago, it was about 18 trillion. Over the last year, it's dropped from 11 trillion to about 700 billion. So we're getting pretty close to zero. And it looks like this is a momentous regime shift. Now, it's important to emphasize that we're going into an entirely new era, or are we going back to normality? Because before about a decade ago, the idea of negative yielding debt, the idea that you'd pay someone to take your money just seemed nonsensical. But in the post-GFC world, as we know, we enacted extraordinary monetary policy, and we're seeing the last of those central banks, the last of those holdouts yesterday show the first sign of capitulating. Now, they still have negative yields, but everyone's expecting that's the next part of their policy that they're going to concede on in the new year. Even if they don't widen the yield curve control further, the band further, they might remove their negative yielding debt. And this will finally disappear and hopefully never return, because it completely messes up markets and it gets people speculating on many other crazy things. And as an interesting comparison, there's about 700 billion left of negative yielding debt. There's still apparently about 800 billion in crypto, which isn't quite negative yielding, but it just ties up your money in useless stuff. So maybe when this goes to zero, that will also go to zero.
Mark, I love the fact that actually you talk about cooking at Christmas, but you did say that the only thing you like, or the thing you like the most, is brandy, which I absolutely love.
Port, Fran. There's a very important difference between port and brandy. Yeah, port's much better with the cheese.
Mark, we're talking, I have like an Italian-French Anglo family, and actually do we have snails or not for Christmas? This is like #1 on the top list.
Snails are brilliant
Mark's
because they're one of the best carriers of garlic butter, so I'm with you.
Okay, Mark Cudmore, thank you so much. We'll talk offline about all things appetizers for Christmas. Bloomberg M Live Managing Editor Mark Cudmore. Now, the BOJ's decision to widen its bond trading band has stunned global markets, one of the last policy decisions from Governor Haruhiko Kuroda, or at least we think. Joining us now is Madison Fowler, global investment strategist at JP Morgan Private Bank. Madison, always great to speak to you, so thank you so much for coming on. How long does it take for a lot of the Japanese investors to bring the money back home if they decide to do so?
Sure. Thank you for having me. I think, again, the market moves that we saw yesterday out of Japan were really astounding. It was the largest one-day jump for dollar-yen since 1998. The 15 basis points chop we saw in JGBs was actually a 7 standard deviation move, looking at daily moves since 2000. And so I think, the official rationale for the move was, of course, to ensure better bond market functioning. But of course, many are interpreting that move as laying the groundwork for policy normalization and a first step towards broader tightening. And so when I think about what this means, I think it emphasizes a few things around this predominant theme of global tightening that we call out in our 2023 outlook. I think first, to your point, this could release that final anchor on the lower yield regime. And this again suggests that we are closer to the end of the global tightening cycle than the beginning. And so to that end, I think as this idea of that final support breaks loose, we will be watching that follow through effect on global yields, particularly as liquidity and activity return after the holiday.
Madison, when do we find out whether this is actually a policy normalization? Yesterday, there was such a big move and actually hope that this is a new phase in the BOJ, but actually Governor Kuroda was really at pains to trying to explain to the markets this is not a rate hike and actually it'll be limited in scope.
Yes, of course. And I think he did take a lot of care to stress that. But nonetheless, when you do think about what exiting yield curve control looks like, this is nonetheless a step towards that direction. So perhaps the market went a little bit too far and, I think getting too optimistic that this is a genuine change already. But nonetheless, I do think that this is kind of that first step towards that process. And so when we look at what that follow-through effect looked like on global yields yesterday, I think that the spike that we saw really offers investors another opportunity to buy core bonds.
So, Madison, overall, what's your tactical or most important play for 2023?
Yes. So I think, broadly speaking, we've seen a dramatic reset in valuations. And I think that's created one of the most attractive entry points for stocks and bonds in over a decade. So for long-term investors, there's really no better time than now. The near-term picture for stocks, I think, is going to remain a little bit choppy. So we are looking, into attractive pricing on structured notes to add exposure with downside protection. But we do expect that to recover into the end of the year. Where I think the real opportunity set really exists over the course of the next 12 months is, again, in core bonds. Bond yields are at their highest levels in a decade, really offering both income and a portfolio ballast. And so I think current yields in many parts of the fixed income complex are really now equivalent to historical equity returns. And that's a really meaningful change that I think that we need to pay attention to as investors.
Madison, does the 60-40 portfolio come back?
I think so. I think this is certainly an environment where when I look on a forward-looking basis, that decision for investors of adding bonds once more back to their portfolio really does look compelling. And so I think, again, when you look at the 60-40 portfolio, compared to years past, this gives investors an opportunity to reach their goals while taking less risk than they have in the last few years. And so I think as interest rates fall in a recession, longer duration core fixed income, specifically investment grade corporates, could really provide potential total returns well into the teens. So I do absolutely think the 60-40 is back.
But how much of a possible global recession actually is priced in equities right now?
So I think significant risk is currently priced in, but not all. I think we need to remember that monetary policy ultimately acts with a lag. Housing is usually the first to crack, followed by manufacturing, and then later the consumer, and finally inflation. And so I think markets are reflecting a lot of that risk, but not yet all of it. And so when I think about how that translates into returns for next year, again, I expect some choppy trading over the course of the next, call it 3 to 6 months as we look for that Fed pause. But I do expect markets to recover into the back half of next year. So I think bottom line is expect some more volatility as we wait to see what happens with inflation and what happens with the global tightening cycle.
Madison, thank you so much. Madison Fowler, global investment strategist at JP Morgan Private Bank, stays with us. Coming up, Musk out. The billionaire confirms he'll step down as chief executive of Twitter once he finds someone, quote, foolish enough to take the job. We'll discuss that next. And this is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Count Under the Close.
Welcome to Bloomberg Crypto.
The top names at the Fed are on Bloomberg.
I do see growth slowing, but remember that's part of the mechanism of getting demand into better balance with supply and alleviating those price pressures.
We're clearly not in a recession right now based on the data. It is an economy that is growing only modestly, and I think it's an economy that's really seeing the imbalances between supply and demand diminishing and inflation coming down.
Nobody covers the Fed like Bloomberg, your global business authority.
There's no doubt in my mind that this is the step towards normalization. The good news for them is I think they can control the process. That's actually good news for global markets because it doesn't force selling by Japanese institutions. However, over time, even this approach becomes unsustainable.
Well, that was Bloomberg opinion columnist Mohamed El-Erian saying that the BOJ's approach is unsustainable over the long term. Now let's get more on that and what the markets are looking for in 2023. Still with us, Madison Fowler, global investment strategist at JP Morgan Private Bank. Madison, what does the Fed do next year? So I know you have a belief that actually they'll stop hiking and inflation will come down, but how painful will it be for them for inflation to come down to target?
Sure. So I think the Fed script hasn't changed that much from the fall. To them, inflation is still too high. The risks are clearly skewed towards not doing enough to tame it. And so I think that keeps the risk that the Fed tightens to a level that will ultimately trigger a recession. And that risk to me is relatively high. And so to your point, we think the Fed will only hike to an upper bound of around 475 before pausing. But importantly, I think that does cause a decent degree of economic pain. As I mentioned, a few moments ago, monetary policy tends to act in a lag. We're already seeing housing in a recession. We're seeing a slowdown in manufacturing, and we've just yet to really see that slowdown really emanate more for the consumer, for employment, and for inflation. And so I don't think that we've seen the full degree of economic pain yet. I think a lot of that's really going to come in the back half of next year. I think ultimately it's going to take a while for that monetary policy transmission mechanism to really flow through the economy.
So, Madison, what does that mean in terms of valuations for example, U.S. stocks, and what's your entry point?
Sure. So I think when I'm thinking over the course of the next 12 months, our year-end 2023 target for the S&P 500 is in a range of 4,200 to 4,300. And I think that also reflects the likelihood that markets remain choppy with downside risks through early 2023 before, again, investors start to look at the next cycle in the second half of next year. When I think in terms of what that means from a numbers perspective, when I'm looking at earnings, for instance, that I think the market is still far too sanguine on corporate earnings. Right now, consensus expects earnings to grow next year around 5%. We think earnings will decline more around 3% next year. So again, I think we're a little bit below consensus there, but nonetheless, I think we're looking for that optimism to come back once we see that Fed pause take place into the back half of next year.
Madison, what's your take on what happens to dollar? And actually, on the back of that, I imagine you have a different EM call if it goes up or down.
Sure. So I think the dollar is in the process of peaking. In order to see the dollar peak, we've been saying that you need to see evidence that inflation is cooling in the U.S., and you also need to see evidence that the worst case scenarios are being avoided in Europe and China. So more improvement from that global growth perspective. And I think we've had evidence come to the fore for that over the course of the last few weeks. Dollar weakness tends to really happen in two stages. First, it tends to happen against lower yielding currencies like the yen, and then the second stage tends to be against emerging market currencies, higher beta currencies. And so I think we're really in that first stage of dollar weakness right now, and so that's where I would be concentrating dollar shorts against those low yielders.
Madison, what's your outlier call? Is there something that actually, I don't know, you assign maybe a small probability, but it could be a very big return? And in which part of the market would that be?
Apologies, I didn't catch the beginning of the question.
So, Madison, is there something like an outlier call, something that's is unlikely to come true, but actually, if it does come true, you could make quite a lot of money with it?
Yes, so I think, of course, market sentiment right now is quite bearish. And I think at the same time, we don't want to ignore that things can also go right and can lead towards a better outcome for 2023. So, of course, in terms of what I'm watching from that perspective, I mean, it is possible that inflation ultimately starts to really fall on its own without the Fed hiking as aggressively as it currently expects. And as a result of that, that soft landing scenario, in my mind, is still a non-zero probability. I still think that there's a runway to that. I just think it's, to your point, a lot narrower than it was previously.
Madison, thanks so much for all of the insight. Madison Fowler, the global investment strategist at JP Morgan Private Bank. Now, Elon Musk says he'll run Twitter software and servers team once he's found someone, quote, foolish enough to replace him as chief executive. Now, a source says he'd already embarked on the search for a new chief executive after losing his own poll, asking whether he should step aside. Now, for more, let's bring in Bloomberg TV's technology co-anchor, Ed Ludlow. Ed, I mean, I love this. First of all, good morning and welcome to London. But I love the fact that he says who's foolish enough, because, I mean, the problem is, would you accept the job despite Elon Musk or despite what Twitter's facing?
It's interesting. I was speaking to some investors in the new private Twitter last night, and they were basically saying, like, we wish Elon would get out of his own way, just get a firm, safe pair of hands in as a new CEO. But that's not what Elon Musk wants, right? He wants what he describes as a technologist, someone who is at their heart an engineer like him, who can go in and fix the product. You know, he's talked about the need to invest heavily in servers. Why? Because I think they want to really redo this kind of technological side of the platform. and somebody, of course, that has to work with a man who's known for being kind of hands-on at Tesla, SpaceX.
But if you take a step back, I mean, what does Twitter need? It's not. Is it someone with, ethics? Is it someone for strategy, or is it someone on the technology side?
I think from Elon Musk's point of view, he wants to fix the technology first, and the financials and the kind of content moderation policy decisions come later. That's what's such a worry to regulators, particularly here in Europe, right? Remember when the transaction closed, Europe was the first to come out and say, well, hold on, you're going to fly by our rules when it comes to a social media platform. But, Musk's move has always been move fast, break things, and in the end, it will be painful, but you'll get there. We saw that in 2018 with Tesla, 2010, the early days of SpaceX. This is his playbook. Yeah,
advertisers, though, don't invest in Tesla. They need to be on Twitter, and a lot of them are pulling out.
Yeah, it's interesting. In the last couple of hours, Musk has been speaking on a Twitter Spaces, unsurprisingly, and he was talking about some of the financials, and he said prior to him making all these kind of painful cuts, the company was on course for $3 billion of negative cash flow next year. But he also said that he thinks Twitter's on course for $3 billion of revenue next year, which is interesting because before Twitter became a private company, I think Bloomberg consensus was for $5.2 billion of sales this year. So that kind of puts into granular terms the drop, $2 billion-ish of revenue with advertisers pulling back. But, again, just as investors have, not just in Twitter, but Tesla investors as well, I think broadly the idea of him stepping back has been cheered. Now we just don't understand because he's saying, well, actually, I'll stay involved as an engineer.
So what are some of the names that are swirling around? And actually, is he looking for a yes man or a yes woman?
I think it's really interesting. Is there such a person, a yes man or yes woman? I think the caliber of person he's looking for needs to be able to work with Musk. The names that are touted are his kind of Silicon Valley associates, right? David Sachs, Jason Calacanis, Sriram Krishnan, who's a partner at Andreessen Horowitz, specializing in crypto. I'm not necessarily sure those are the names that the investors want or the Musk himself envisages. You remember that John Legere, the former T-Mobile CEO, volunteered on Twitter, and Musk just replied, no, just no. And he kind of later followed up with a tweet saying, I respect you, but you're not what I'm looking for. I want this technologist type. So I think, in short, we don't really know. And, Musk has responded with humor. To some of the suggestions that have been put on Twitter, so they're probably not on his list either.
But I guess, is he thinking, I mean, the advertisers will want someone who brings something more. I mean, if the point is to try and, if not get rid of Elon Musk, certainly temper some of his behavior, it has to be someone actually quite strong and their own person.
Yeah, what I would say is that you look at the way that Tesla and SpaceX operate. Musk is kind of the visible face of those companies, but actually in SpaceX they have a very competent COO, Gwynne Shotwell, who runs what is the dominant player in commercial space launch and satellites. And in Tesla, very competent CFO, Sat Kirkhorn. He's not sort of in everyone's face. People he goes under the radar, but there is a lot of competency there. So it is possible that someone with kind of a lower profile comes in and does this job. But we know he doesn't want a management type person. Yeah. He wants a technologist.
So some of the names like Sheryl Sandberg, Marissa Mayer.
I think Sheryl Sandberg's really interesting because she is on the market in the sense that she's no longer at Meta. Her CV is certainly completely correct for Twitter. She remains involved in Meta from a board perspective. So it'd be interesting if that's kind of PC or, in order to happen. But yeah, I think what's worrying about the situation is that Musk keeps saying there is no one who wants the job but has the ability to do it. And we actually don't have a good read on who the short list of candidates is.
Ed, thank you so much. Bloomberg TV's technology co-anchor, Ed Ludlow. Now, coming up, Adidas shares are higher after Nike's global sales beat. We'll discuss some of today's big equity moves. That's coming up next, and this is Bloomberg.
Now they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Welcome back to the Open, everyone. 24 minutes into the European trading day. Finally, we're seeing gains across the board. It's the first time in 4 sessions that we saw futures up and now equity indices up. European stocks getting some 0.4%. A bit of a respite after a tough couple of weeks. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. The U.S. House Committee has voted to publicly release Donald Trump's personal and business tax returns from 2015 to 2020. It caps a 3-year legal saga initiated by the Democrats to obtain and release the former president's closely held financial documents. The vote comes in the waning days of the House Democratic majority and follows Trump's referral for criminal prosecution by another House panel. Federal authorities are set to whisk Sam Bankman-Fried to the U.S. on Wednesday to face a range of criminal charges related to the collapse of the FTX crypto exchange. Bankman-Fried will sign documents at a Bahamas courthouse, finalizing his waiver of rights to fight extradition. After that, the FTX co-founder will be accompanied by FBI agents on a non-commercial aircraft back to the U.S. Ukrainian President Volodymyr Zelensky is expected to travel to Washington on Wednesday to meet with President Biden and address Congress. Sources say Biden will host Zelensky at the White House. The speech will follow an expected move by the Biden administration to announce delivery of Patriot anti-aircraft missiles to Kyiv, ratcheting up U.S. support. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thank you so much. Quickly, onto your movers. They're all dictated, actually, by what's happening in the U.S. Nike yesterday posting another quarter of inventory buildup, but also said quarterly sales exceeded estimates, which is why Adidas is getting a nice bounce, up 6%. FedEx over in the States also reported second quarter earnings that beat analyst estimates, lifted by price increases. I feel like I'm a big contributor to a lot of these parcel delivery companies. Deutsche Post gaining 1%. And finally, the EU has approved a huge rescue for Uniper with a long list of conditions on the back of that. Uniper up 6%. Coming up, we discuss a move from the BOJ, sending ripple effects across global markets. This is Bloomberg.
successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. European indices edge up in early trade as the S&P 500 snaps a 4-day decline. Japanese 2-year yields rise above zero for the first time since 2015, while the yen slips following yesterday's momentous surge. Stepping down, Elon Musk confirms he will resign as Twitter chief executive after finding a successor. The billionaire says he will still run the company's engineering teams. Plus, data release. A House committee votes to release Donald Trump's tax information to the public, capping a 3-year legal tussle over the former president's finance. Now, this is the picture for equities. I've been trying to make a linkage with something that's going on around the world, but let's face it, it's probably thin volumes. European stocks gaining 0.5%, so 0.5%, much like the DAX and the FTSE. That's gaining 0.2%, and this is on the back of 4 days, 4 straight sessions where we had quite a lot of pressure. Also, we're waiting to see what Japanese investors are doing or how they will repatriate some of the money because of the yield curve control that Governor Kuroda changed. I don't know whether that will happen or it's something for early next year, but certainly don't read too much into this. It's nice to finish the year possibly on a bit of a high note, but there's no underlying fundamentals that actually support that. Retail, one of the biggest gainers in today's trading session, 2%. Although if you are in London and go to Oxford Street, it's absolute mayhem. So it could explain some of certainly the retail stocks doing not too badly. And then we had that FedEx figure yesterday, and Nike better than estimated. Real estate actually 1.7% higher. Travel and leisure also gaining 1%. Certainly the banks, but they're pretty much flat. The biggest loser in terms of industry groups. Now, global markets still feeling the impact of the BOJ's surprise policy change as traders approach the end of the year, or at the end of one of the worst years for stocks and bonds in a generation. How sustainable is this yield curve control going to be? Well, let's bring in Bloomberg senior economy editor Michelle Jamarisco for more on this. Michelle, I mean, the big question is, so first I want to ask you what we're seeing on day 2, but is this policy normalization or is this just to counter yen moves?
Yeah, huge question, Francine. Day 2, first off, I mean, pretty quiet compared to yesterday, of course. I mean, we're kind of slipping into that holiday lull. We're seeing markets kind of being a little bit quieter. Of course, the BOJ being quieter. They don't want to take that message any further from yesterday's shock. So we are still seeing bets about yen strengthening continuing. Of course, we're hanging around 131 to the dollar now, but a lot of people looking at perhaps it falling into the 120s, maybe even further. So a lot of market speculation around that. As far as your question around what this means going forward, forward, YCC, I mean, yesterday was very un-Kuroda-like. We saw this shock, you know, he stood up to the bond bullies all year, including July, where it was a very tumultuous time. He said, we're not going to change this, and then all of a sudden he flipped the policy. I think there were two things that really kind of rattled our team in terms of watching this from a central banking perspective, and that is two things that he kind of went back on yesterday, and we're watching going forward. One, he had been saying that, you know, the widening of the policy band meant essentially would mean a tightening, and then yesterday he flipped that. When they did actually widen the policy band, he said, no, it doesn't mean tightening. So he's having to make this case with investors that, you know, this was more about bond market stability than it was about fighting inflation, and that's just not working right now. And then secondly, you know, he talked to our reporters in the last press conference. He said, you know, the yield curve was an appropriate shape. Not much had changed since then, but then, you know, something, you know, spurred Kuroda to decide that there needed to be a change in the YCC.
Michelle, I guess the problem when you do something like this is that traders are going to test you, right? And they're going to test your red lines.
That's right.
When are we going to see the end of this?
Yeah, I mean, it's really a risk that we've talked about all year, that if you give them an inch, they'll take a mile, or the dam will break, whatever metaphor you want to choose. We're certainly seeing that already. A number of traders are already testing, you know, where can we take this? How far can we push the BOJ now that they've seemed to have capitulated, even though Kuroda would fight back against that notion and fought back hard yesterday to little success. So we've got a few months ahead, very rocky times as Kuroda looks toward the exit. You know, in April, we'll see that transition in the BOJ. We'll get the new candidate around February, and that will tend to kind of give us a huge hint as to where policy normalization will go, if it goes at all. But the bottom line is this really does open the door for the BOJ to continue on that track, even if it's something that Kuroda, as we've known, does not want to do.
Michelle, thank you so much, as always, for all of your insight. Bloomberg's Michelle Drumrisco there. Now let's bring in Kristen Surak, Associate Professor of Political Sociology at the LSE. Kristen, thank you for joining us. You focus a lot on, I guess, labor dynamics, but also wage dynamics in Japan. What do they need over the next 12 months to be economically more sound?
Well, Kuroda in his announcement about the BOJ moves did specify that he was trying to encourage companies to increase wages. And this has been a long time project ever since the beginning of Abenomics as well. However, small and medium-sized firms haven't really been able to get on the ball with it. Larger firms have begun to increase wages, and there'll be another effort in April as well to renegotiate wage rates, but at big firms mainly. And so the current aim is for 5%, which will definitely put money in people's pockets, but not everybody's pockets, only those employed at very big businesses. So whether or not they'll be successful at shifting into a more demand side engine driving the economy forward still remains a big question.
Yeah. I mean, when does that change? So, Professor, we heard, and actually my executive editor reminded us, if you look at wage growth for the last 2 decades, France, for example, saw an 18% increase. The U.S. a 25% increase. I mean, those 3, 4, 5% in Japan just doesn't cut it. What does it take to change that?
Exactly. I mean, 5% for Japan would be a big move. In the past 30 years or so, it's really seen around 2-3% wage growth in general. But at the same time, prices have remained fairly stable up until Abenomics, and even then, his goal of getting inflation above 2%, was never really achieved until the recent global economic huge increase in inflation, and still even then, inflation in Japan is less than 4%. So driving forward wage growth will be a big challenge on many scores. It's quite interesting in looking at Japan because there's been a lot of unconventional monetary policy in recent years. Lots of printing money, but whether that really gets into the hands of consumers to drive the economy forward yet further, we haven't seen that to the extent that we might in other places.
Japan also has huge challenges demographically with an aging population, which again skews the dynamics towards, for example, saving and things like that. I remember for the last 10 years in Europe saying, like, we're becoming more like Japan, and people were really concerned about stagflation. Again, what has Japan learned over the last 10 years that we can try and rectify in Europe before it's too late?
Well, Japan hasn't had high enough interest rates to really warrant stagflation, but at the same time, the demographic time bomb is a real concern. Birth rates this year are going to be less than 800,000, and that's in a country of over 120 million people. In fact, it's almost remarkable that GDP continues to increase despite the decline in population as well. So in that sense, going forward, it's in a way, Japan shows how it's possible to muddle through despite having a largely comatose economy for the past 30 years. However, it's been able to do so only by printing huge amounts of money, and whether that's sustainable outside and on a larger scale, for example, across Western Europe or North America as well, remains to be seen.
Professor, do you think that, the change yesterday with the yield curve control by Governor Kuroda means this is, this was a failure of Abenomics and some of the policies, the unconventional policies put in place?
It's hard to read what is really lying behind his reasoning. There's been a lot of speculation in Japan as well that he could be perhaps opening up or paving the way for his successor to adopt more conventional monetary policies, easing off the Abenomics goals or allowing more policy options in making this move. So whether that is indeed the case, whether this is really just a substitute for raising interest rates, whether it's a way to decrease or to strengthen the yen against the dollar, all of this remains in a sense, he's put this out there, and how the markets interpret it will determine what it really means going forward.
Christian Surek, thank you so much for joining us, Associate Professor of Political Sociology at the LSE. Now, coming up, first face-to-face appeal, Ukraine President Zelensky will make his first trip abroad since the war began. We look at the significance of this and his visit to the U.S. That's coming up next, and this is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Welcome back to the Open, everyone. 42 minutes into European trading day. For the first time in 4 days, actually, stocks are gaining some 0.5%. Now, the Ukraine president, Volodymyr Zelensky, will leave the country for the first time since Russia's invasion to meet U.S. President Joe Biden and address Congress in person. Meanwhile, Russian gas flows are continuing via alternative links after an explosion at a pipeline that goes through Ukraine and supplies gas to Europe was hit, we understand, yesterday. Now, for more on both these stories, we're joined by Piotr Skolimowski, our Warsaw bureau chief, and Bloomberg's Oliver Kirk in Berlin. So, Piotr, first of all, what is the significance of Zelensky's visit to the U.S.?
Hi, Francine. It's really significant. As you mentioned, this is the first time that he's leaving his country since the war began on the 24th of February. And obviously, we're 300 days into this war. So obviously that's the biggest significance of that trip. It comes as the country is being hit by drones attack, by missiles from Russia, and obviously they are crippling the infrastructure. So there are power outages. There is no water in large parts of the country. So obviously Zelensky is going to the U.S. and we've seen footage of him just actually passing through Poland this morning. So he's going to the U.S. to plead for more help, and his meeting with Biden, then his address to Congress, will be also he will also be presented with additional aid. So apparently, Biden is going to present a package of nearly $2 billion of additional aid, and also present a plan to deploy Patriot missiles, which will give Ukraine more abilities to defend themselves from the incoming missiles. So it's a major development, obviously a very dangerous trip, but still it shows how at this point in this war he really wants to appeal to the U.S. where obviously the support for the war may be flagging with the new House of Representatives, new Congress convening in next year.
So, Piotr, I mean, it is incredible to think that the war has lasted for 10 months. Is there any sense of when it might end or where it's heading next?
Well, it's anyone's guess. I mean, at this point, obviously, we are in a bit of a stalemate. Part of this is obviously the conditions on the ground. It's muddy. There's no way to actually push on with ground offensive. So for the past few months, what we've seen that after this sort of lightning advance of the Ukrainian forces and quite impressive retaking of large swathe of the territory, the offensive has stopped. Now, what Ukraine is worried about is what's next, whether the Russian forces are actually trying to plan a new invasion, and that's something that we've heard and was being flagged by the U.S. By the Ukrainian generals, is that come January or maybe come spring, there is going to be a new offensive. Whether that happens, we're going to see. We saw Putin was visiting Belarus, so obviously Belarus has made its territory available to Russian forces. It hasn't been involved directly in fighting, but it made its territory available to Putin to actually launch attacks. So it's a situation. It's a very tricky situation where Ukraine doesn't know where this is going to go next. So obviously, going to the U.S. to appeal for more help, for more aid makes more sense. But obviously, this is going to last for much longer.
Ollie, what has the cost Europe has paid for energy since the war began?
So when you look at this, as we were saying, 300 days since the war began, and those 300 days in Europe have been marked by bailouts, by aid, but also by higher energy costs. So if you take just that last part of it, the energy cost side of it, Bloomberg has crunched the numbers just by market pricing. It has cost Europe $1 trillion in terms of market pricing, right? Now, that doesn't take into account the subsidies we've had from governments and the help that the governments have put forward in order to reduce that cost to individuals, but it does illustrate how large a number that is, and so that cost needs to be borne either by governments, either by private industry, or by households. That doesn't count in the bailouts. You have Uniper, you have EDF. All of this has cost governments, according to Bruegel, 700 billion euros through the end of November. So going forward, if prices remain elevated, this really sets out the challenge that these governments are going to have to face coming forward. Germany is issuing a record amount of debt next year, more than €500 billion. We'll talk to Christian Lindner a little bit later about that.
Yeah, I'm looking forward to that interview. So what's the outlook for gas, Ollie?
So in the short term, it's all about storage and it's all about the temperature. It's warmed up here in Germany, in the UK, and in Poland, as I understand it. As a result, that is driving some of the gas futures lower today. But in the longer term, it's three letters, LNG. That is what is going to plug the gap of the Russian supply. Germany's LNG tanker arrived here for the first one this week. Gas will start flowing on Thursday. But in longer term, these are very competitive markets for that LNG cargo. China comes back online. That could increase China's demand for gas for 7% next year. And it all comes with the price cap in play as well. And it's not entirely sure how that's going to play out in the markets.
Thank you so much, both of you, of course, for joining us this morning. Piotr Skolimowski, our Warsaw Bureau Chief, and Bloomberg's Oliver Kirk in Berlin. Now, coming up later this morning, we have an exclusive interview with Germany's finance minister. He's Christian Lindner. That'd be a good conversation that Maria today will bring us, of course, on gas, oil, and the war in Ukraine. That's at 1:30 p.m. UK time. Now, let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. The European Union has approved Germany's nationalisation of Uniper with a long list of conditions. The EU signed off on a €34.5 billion rescue package for Uniper, the biggest in German history. But the gas company must sell power plants in Germany and Hungary, and the government has to reduce its shareholding to 25% by the end of 2028 in order to satisfy the Commission. Nike's quarterly sales and gross margin have exceeded Wall Street's estimates. Global sales at the world's largest sportswear company rose 17% to $13.3 billion, beating estimates of $12.6 billion. Nike credited expanding digital leadership for revenues. Gross margin fell to 42.9%, still above expectations. Bloomberg's learned Deutsche Bank is considering giving some of its top earners in Germany and other key markets an elevated salary increase to help offset surging inflation. Sources say base pay is likely to rise by as much as 4% on average. We're told it also plans to cut bonuses for investment bankers who've seen weaker performance. That's the Bloomberg Business Flash. Francine.
Laura, thanks so much. Laura Wright in London. Coming up, no early Christmas gift as strikes in the UK are set to continue into the new year. More on that next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. 52 minutes into the European trading day. Look at that. After 4 days of losses, we finally have some gains. Nothing huge, nothing fundamentally has changed, and we still see how the yield curve control relaxation will play out with, of course, Japanese investors repatriating money. For the moment, European stocks gaining some 0.7%. Now, UK unions have made a final plea for Prime Minister Rishi Sunak to discuss higher pay settlements for workers in the UK's National Health Service as ambulance staff go on strike following industrial action by nurses. Joining us now is Bloomberg's UK, of course, correspondent Lizzie Burden. So, Lizzie, thank you so much for joining us. I mean, what a week, right? So, Rishi Sunak is refusing to commit to greater pay increases for NHS workers, and they're still striking.
Yes, and we heard from him in his own words yesterday at the Parliamentary Liaison Committee for the first time. Same script as it has been all summer throughout the leadership campaign. Inflation is public enemy number one. It's affecting everyone, not just the nurses. And if he gives in to the unions, it would add to the problem. He, therefore, is deferring to the public sector independent wage bodies, but the nurses say they're not really independent because the parameters are set by the government. Now, this morning, we've had the public borrowing figures from the Office for National Statistics, £22 billion for November, the highest monthly level on record. Higher inflation, higher interest rates are adding to the cost of servicing the debt. So the government's argument is if you pay the nurses more, it's going to be more borrowing, or you're going to take away funding from frontline services.
But so first of all, is there support for the strike? And this is not only an economic question, this is a political question. Will it end badly for Rishi Sunak?
Exactly, and if this carries on, because the nurses say if you don't negotiate now, this could carry on into January, beyond into 2024 even, then this could dominate an election. And you remember in 1974, the Conservatives asked the public who governs, and the country said, not you. So this is the risk for Rishi Sunak, and you mentioned the polls. Interestingly, there is support for the nurses having higher pay, but there's less support for example, the rail workers. And so an option that's available to the government would be to divide and conquer, give certain sectors a one-off bonus to deal with the cost of living. But Rishi Sunak's spokesman's poured cold water on that.
Okay, so but if they do that, would they do it now? Does it make more sense doing it now rather than delaying it?
Well, it depends what inflation does next year. You know, if they don't do it now, then they might have to do even higher rises next year. But can the public deal with all this disruption? The gamble that Rishi Sunak seems to be taking is that the more people are directly affected, then the more public opinion is going to turn against the nurses. And if you look at the actual disruption this is causing, expectant mothers can't deliver at home because they won't be an ambulance to take them to the hospital. People with strokes and heart attacks might not receive a response. People who have a fall will have a long wait. This is serious stuff. The unions are blaming the government's blaming the unions.
All right, Lizzie, thank you so much. Lizzie Bird there with the very latest, of course, on the UK, and I have to say it's definitely a month of discontent. Now, this is a picture for a lot of the stock movers. First of all, Adidas, this is after Nike posted another quarter of inventory build-up, but at the same time, they said quarterly sales actually exceeded Wall Street's estimate. So that's alleviating some of the concern we had there from investors. Shares of Nike ended up actually higher in late trading, and this is giving a nice little boost to companies such as Adidas. The other story watching out for is Deutsche Post. Now, this is on the back of FedEx reporting a fiscal second quarter earnings that really beat analyst estimates. They were able to to increase their prices, but also cut costs. So there is a hope that some of the parcel delivery companies, such as Deutsche Post, will be able to do the same here in Europe. And then finally, the EU actually approved this huge Uniper rescue with a long list of conditions. Uniper getting 5.6%. That's it for the European Market Open. Surveillance Early Edition is up next, and this is Bloomberg.
is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime, but we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. European indices edge up in early trade as the S&P 500 snaps a 4-day decline. Japanese 2-year yields rise above zero for the first time since 2015. The yen slips following yesterday's momentous surge. Stepping down, Elon Musk confirms he will resign as Twitter chief executive after finding a successor. The billionaire says he will still run the company's engineering teams. Plus, in data release, a House committee votes to release Donald Trump's tax information to the public, capping a 3-year legal tussle over the former president's finances. Now, this is the picture for the markets. I have to say, compared to the day that we had yesterday, on the back of what Governor Kuroda said, it's a pretty yawn day. The picture overall is, look, European stocks are gaining about 0.5%. That's pulling some of the S&P futures also up. The U.S. 10-year yield at 3.6842. Now, yen, of course, is where it gets a bit more interesting, 131.56. And then, really, it's all about, the BOJ and what economists are expecting, probably to raise interest rates. The latest, really, global central bank, to raise this campaign of hawkish policy that's proved toxic to balance investing strategies this year. So what that means is that we could also see some of the Japanese investors repatriate some of the money back home. We haven't really seen some big moves for the moment, but of course, watch out for that. And then we had some inventory over in the U.S. yesterday. Today, Brent 80.15. Now, the European map, let's have a look at what European equities are doing. You can see the FTSE getting some 0.3%. The DAX, now the interview of the day, of course, is with Mr. Lindner of the government. Our Maria today will bring you that interview. The DAX over there gaining some 0.7%, much like the CAC 40 in France. So the BOJ's decision to widen its trading band for 10-year yields continue to ripple through global markets. Just how sustainable would this yield curve control be? Well, we're now joined by Daniel McCormack, head of research at Macquarie Asset Management and Bloomberg's currency and rates strategist. He is Ven Ram from our MLive team. So thank you both for joining us. Daniel, first of all, how much are you expecting a lot of traders, but also market participants, to test the red lines of the BOJ?
They certainly could do so in coming weeks and months, Francine. Look, it's a big move from the BOJ. It's a real curveball before Christmas. And, you can probably understand why the Bank of Japan is doing it. Core inflation is up, wages growth is up, and maybe Kuroda wants to make a step towards normalization before he steps down in April next year. And I think it just really also goes to sort of reinforce just how the global interest rate structure is now on the rise and possibly in a structural sense.
Yeah, Ven, do you agree with that? How do you see it playing out?
Morning, Francine. Yes, I do agree with Daniel very broadly. I do think that the yield curves are going to explode in Japan, particularly at the front end, because we're already seeing the 2-year yield at 0%. And I think that that's going to climb up to 50 basis points at the very least by the first quarter, definitely by the first half of the new year. Because, the BOJ isn't going to stop here. I think they will relax the curve control even further to 1 percentage point. So an adjustment higher in yields is required.
Yeah, Ven, I was really struck yesterday, of course, by some of your analysis, including, the yen's 7 standard deviation move. You don't believe this is a one-off bazooka strike. Is this policy normalization?
It is policy normalization, except that they, of course, won't choose to call it that way. It is definitely policy normalization, especially considering that Kuroda is coming down to the end of his term, and it doesn't look like the rest of the finance ministry and the rest of the people at BOJ share his vision of a weaker yen and a higher inflation. And I think there is too much of national pride involved in letting the yen go down or make an adjustment as is required by standard economics textbooks. So I think that there is a lot of pressure on the BOJ to shore up the yen. And in a scenario where the Fed keeps going on rates, it is presumable that the BOJ will have to relax the curve control even more. So this is not a one-off measure for sure.
So, Daniel, how do you see this playing out? First of all, Daniel McCormack, when you see, how much do you see, of course, of money coming back into Japan, and in what timeline?
So it could come back reasonably quickly, Francine. I mean, Japan is a huge exporter of capital. For a long time, Japanese domestic savers have received virtually zero return on their money, and now it looks like that is set to change. And the impact that has on global capital flows and global liquidity could be significant. And of course, you're layering it on top of the fact that central banks everywhere are tightening. We've got QT going on. So I think as we go through 2023, liquidity conditions generally are going to tighten up. This era of money everywhere, just money sloshing through the system, is clearly over. And this move by the Bank of Japan just adds to that.
So, Daniel, you also argue that actually our economies have profoundly changed. Do you think equities or investors have realized that? Are they pricing in the structural change?
So not in my view. And the structural change you refer to, Francine, is our view that the supply side, growth in the supply side of the global economy has slowed down in a structural sense. And what that means, of course, is that going forward, you're going to have a bit higher inflation than we've been used to for a while, a bit higher interest rates than you've been used to for a while, and more volatile GDP growth. And if you look at, say, where the S&P 500 is today, where it's trading on about 18 times based on the latest numbers that I looked at, long run average is around about 17. That doesn't suggest to me, with the PE above the long run average, that investors have fully recognized this and are pricing it in. So I'd expect not only additional pressure on earnings over the next 6 months for the S&P 500, but perhaps some pressure on the multiple as well.
Ven, do you see currencies being smarter about some of the shifts that will change into a higher inflationary environment?
Yes, I think that there's going to be a paradigm shift in currencies going into 2023. 2022 was, of course, the year of dollar strength, inordinate dollar strength. I think that's going to fade into 2023. And the currencies that are going to make a huge comeback, or the euro, the yen, and the pound, because those are the regions where the central banks are likely to be much more active in raising rates, rather than the Fed, which is approaching the top end of its of the terminal rate that it indicated in the dot plot.
But do you see, Ven, what's the currency that actually mispriced the most? I don't know whether mispricing is the right word, but is there something where there's a long way to go if the central bank's going to achieve their goal of inflation next year?
Definitely, I think that the yen is fundamentally undervalued, and by a whole lot. If you look at purchasing power parity terms, the yen is probably the cheapest it's ever been in its history. And if you look at other measures, if you look at nominal rates, if you look at the inflation-adjusted rate differentials, I think that the yen is massively undervalued there as well. And I do think that, all of that, it's not going to erase all of those that undervaluation at one fell swoop. But I do think that it's going to start improving from here on and start appreciating from here on. And I think that we will probably see the dollar-yen go down to 118 levels next year if the BOJ continues with its normalization.
So, Daniel, thank you for that, Ven. Daniel, where do you see the biggest shift, or how do you play everything tactically?
In terms of the yen, I mean, I think I would agree that the yen is undervalued. I think certainly that is true from a price level perspective, but I think any move higher in the yen is going to be dependent upon the BOJ continuing to make moves to normalize in 2023. I mean, tactically at the moment for asset allocators, I mean, we prefer bonds over equities as we roll into 2023. We think inflation is going to come down. The developed world economies are going to go into recession. The Fed is close to peaking out. That adds up to a pretty good 6 months for bonds, while, as I mentioned before, I think equities are still a little bit overvalued. We would also argue that, real assets, and particularly infrastructure, are a great play next year. Gives you inflation protection, yield, defensiveness, access to structural growth drivers rather than cyclical growth drivers. So all of that, we think, adds up to a good outlook for real assets and bonds. So that's where we would have our money.
But Daniel, where do you see, so real estate, where do you see the most value? I know we're also looking at a change and shift with possible deep housing market crashes in certain parts of the world.
The outlook for real estate is less good than the outlook for infrastructure, I would say. And the key issue there is that real estate just has greater sensitivity to interest rates. So, the push up in risk-free rates is causing cap rates to go up, and financing costs have risen now and are above cap rates in many instances. So there's certainly some pressure on real estate globally. Look, we like rental housing, particularly rental housing in sort of Anglo-Saxon markets such as the US and the UK. Probably lower on the list would be things like secondary office, which we think are facing both cyclical and structural headwinds. So cyclical demand deterioration next year as the developed world goes into recession, and then just a structural headwind from all this working from home. So there's certainly things that we like, but overall property is probably less attractive in 2023 than, say, infrastructure.
Okay, thank you both for joining us today. Daniel McCormack, their head of research at Macquarie Asset Management, and Bloomberg's Ven Ram. Now, coming up, Musk out. The billionaire confirms he'll step down as chief executive of Twitter once he finds someone, quote, foolish enough to take the job. So we discuss that next. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The top top names at the Fed are on Bloomberg.
I do see growth slowing, but remember that's part of the mechanism of getting demand into better balance with supply and alleviating those price pressures.
We're clearly not in a recession right now based on the data. It is an economy that is growing only modestly, and I think it's an economy that's really seeing the imbalances between supply and demand diminishing and inflation coming down.
Nobody covers the Fed like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition of Francine Lacroix here in London. Now, Elon Musk says he'll run Twitter software and servers team once he's found someone, quote, foolish enough to replace him as chief executive. A source says he had already embarked on the search for a new chief executive after losing his own poll, asking whether he should step aside. I think that was about 78 hours ago. Now, for more on all of this, let's bring in Bloomberg TV's technology co-anchor, Ed Ludlow, who, of course, follows Elon Musk very closely. So, Ed, first of all, big names out there. I mean, there's a lot of speculation on who could and who would want the job. What are you hearing?
Speculation's the right word. I mean, I've spoken to a lot of sort of investors in the private company and also former Twitter insiders, right, who have kind of left of their own volition or been fired. And, you know, there's this school of thought that he has this group of Silicon Valley associates. They call it the Fix-It team. Jason Calacanis, David Sachs. Those two first names, a lot of skepticism that they actually have what it takes or what Elon Musk is looking for. The other name on that screen, Sriram Krishnan, he's a partner at Andreessen Horowitz. He kind of specializes in crypto. He's an engineer by background. Folks I've spoken to say that's more likely. The problem with all of these is that we don't actually have a good sense at all if that's where Musk's thinking. What we know is he doesn't want this manager type. He wants a tech nerd, an engineer, a software person.
Yeah, we also don't know whether he really wants to step down because he's stepping down after a poll asked him to step down. And so the dynamics between him and the new chief executive could be quite awkward.
Oh, I mean, there's always risk in trying to guess what's going on in the head of Elon Musk. But, you know, he at Tesla and SpaceX doesn't consider himself to be the chief executive officer in sort of the legacy or traditional sense of the word. He considers himself an engineer, somebody that's focused on the product, the innovation, and that's the kind of person he wants to bring in, which is interesting because Musk confirming overnight that he would step back as CEO, said he'd remain handling that side of the business, the engineering side. He wants a technologist to come in and help him, so it's not clear how he'd run the company. You also have to find somebody that can work with Elon Musk.
But Ed, so what I don't understand, is he trying to create the super app? Because that's why you would need technology.
Yeah.
I mean, if it's just a kind of, you know, social media Twitter platform, I don't know what, you know, how the technologists would actually change. It's more of a moral values issues that we're dealing with and a trust issue that's been lost.
We think so based on the emphasis he's put on the need to invest in servers, right? Why do you need more servers or more capable servers? Well, you're probably trying to run a broader set of data. Why run a broader set of data? Well, you want this to be the everything app.
Right.
You know, he's kind of floated the idea of payments already. Remember, his background, everyone forgets, is PayPal. That's kind of where he made his name in Silicon Valley. So adding payments functionality, but you're completely right on the content model.
Trust, right? The problem is that if you don't trust what's happening at Twitter, and a lot of people have gone off and a lot of advertisers have stopped advertising it, then how does he build the app?
Yeah, I think the concern is that right now he himself is making a lot of the content moderation and policy decisions, and he suspended what has been a long-standing team, the trust and safety team at Twitter. So a lot of folks are asking, well, hold on, if you're trying to bring in a technologist and you yourself are focused on engineering, who is going to focus on this? The original idea of having sort of an independent body of various names to make those policy or content enforcement decisions, that was suspended too. So we're in limbo a little bit in that area.
Yeah, limbo a lot. Bloomberg TV's technology co-anchor there, Ed Ludlow, with, of course, the inside scoop on what's going on at Twitter. Now, a House committee voted to release Donald Trump's tax information to the public, ending a 3-year legal battle initiated by Democrats. Joining us for more on all of this is Bill Ferries. He's our senior editor for Bloomberg Asia. Bill, what did we actually learn from this latest release? What are the red flags that Congress's nonpartisan tax experts cited?
Well, it's been very interesting. We don't get the tax filings for probably a few more days, but the report we do have lists some very questionable deductions, loans to Donald Trump's children that could just be outright payments, and other kind of charitable deductions that weren't well documented that would raise a lot of red flags for many ordinary people, let alone someone with as high profile a job as President Trump had. So it kind of adds to a lot of the questions about why he has withheld these tax forms and what it might mean going forward.
So why the urgent release of these documents now?
Well, I think why we're getting them now is, you have this committee. First of all, the Ways and Means Committee didn't get access to some of these documents until just over a month ago. And of course, you have the political calendar. The first week of January, Republicans will take over the House of Representatives. This is not the kind of inquiry they would be pursuing. So the Democratic-led committee has just really a few days on its calendar to get some of these things out. They would argue it's in the best interest of transparency and good governance going forward. A lot of Republicans and the former president himself would say it's all about politics.
Yeah, so, what impact, Bill, and we need to see the release, of course, but what does this mean for Trump and his bid for the presidency in 2024?
Well, it's already been a rough several weeks for the president. He had his company was convicted of tax fraud. He, of course, hosted that dinner with a white supremacist. And he's seen a lot of his, or some of his support shift over to Florida Governor Ron DeSantis after kind of a lackluster start to his campaign and the loss of many Republicans in the midterm elections. So, I think for people who are diehard supporters of the president, this doesn't move the needle at all. But for those Republicans who were looking for an excuse to maybe support other candidates or try to get beyond Trump, this is just additional fodder for them to say it's time to look for someone fresh to lead the party.
All right, Bill, thanks so much. Bill Ferry is their senior editor for Bloomberg Asia. Coming up, first, face-to-face appeal. The Ukrainian president, Volodymyr Zelensky, will make his first trip abroad since the war began. We look into the significance of this visit to the U.S. later in the hour. This is Bloomberg.
Now they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
A lot's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Information you want Thought, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Federal authorities are set to whisk Sam Bankman-Fried to the U.S. today to face a range of criminal charges related to the collapse of the FTX crypto exchange. Bankman-Fried will sign documents at a Bahamas courthouse, finalizing his waiver of rights to fight extradition. After that, the FTX co-founder will be accompanied by FBI agents on a non-commercial aircraft back to the U.S. Now, Elon Musk says he'll run Twitter's software and service teams once he has found someone to replace them as CEO. A source said he has already embarked on a search for a new chief executive after losing his very own poll asking whether he should step aside. Musk made the announcement in a tweet declaring he'll go once he can find someone, quote, foolish enough to take the job. Ukraine's President Volodymyr Zelensky is traveling to Washington today to meet President Joe Biden and also address Congress. Sources say Biden will host Zelensky at the White House. The speech will follow an expected move by the Biden administration to announce a delivery of Patriot anti-craft missiles to Kyiv, ratcheting up U.S. support. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Leanne Gerrans in London. Now, quite a lot of movers, actually, for a quiet day, a couple of days before the holiday season. I'm looking at these three. Thank you, Mohammed, for putting them together. First of all, Adidas getting some 8.4%. This is on the back of Nike posting another quarter of inventory buildup. That's the not so good news. But the good news is that quarterly sales actually exceeded Wall Street estimates. That means that investors are less concerned about the future. Shares of Nike were up in late trading, and that's giving a boost to rival Adidas because of a lot of investors think that they will also report some robust sales. Deutsche Post getting some 1.4% after FedEx also beat estimates. And then finally, the EU actually approving a huge Uniper rescue on the back of that, 3.5% higher for Uniper. Coming up, we look at Amazon and other technology stocks. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Ripples continue in markets on day two after the BOJ's shock policy change. European stocks rise after the S&P 500 snaps a four-day decline, while Japan announces further bond buying to defend its upper yield limit, while two-year yields rise above zero for the first time since 2015. Stepping down, Elon Musk confirms he will resign as Twitter chief executive after finding a successor. The billionaire says he will still run the company's engineering teams. Plus, data release. The House committee votes to release Donald Trump's tax information to the public, capping a 3-year legal tussle over the former president's finances. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, these are the big movers, and actually, we need to spend a bit of time talking about this, because the one I was really interested in was Nike and FedEx. Now, FedEx, of course, because of these two better-than-expected companies reporting in the U.S., it's really giving a lift to some of the companies that are in the same sector here in Europe. So Adidas, of course, a direct competitor to Nike, Deutsche Post, a competitor, or certainly a peer to FedEx. So first of all, FedEx reporting fiscal second quarter earnings that beat analyst estimates. And this is because they were able to, increase prices. They were also able to cut costs, and that made up for a decline in package volume. So I'm looking at a couple of analyst notes, and they basically believe because FedEx could do it, a lot of the similar parcel delivery services in Europe could also do the same. And then Adidas gaining on the back of Nike reporting some pretty robust sales. The pileup in inventories continues, but they were really able to increase sales. And then Uniper very quickly gaining 4% after the EU approved a rescue package. Let's turn to the tech space now. And layoffs accelerate across some of the biggest names. What are the tech jobs of the future? Well, Amazon has released its top predictions, which includes a paramedic drone programmer, an AI expert with medical knowledge that will teach drones to assist rescue teams. Well, joining us now is Lauren Kisser, Technology Director at Amazon. Lauren, thank you so much for joining us. This is a fun and very important segment, because a lot of people watching won't have any idea of what these jobs of tomorrow look like. First of all, is it technical skills like medicine or coding, or is it really value skills, the moral skills, the jobs of tomorrow?
Hi, thanks for having me. Yes, I think it's a combination of all those skills, right? We have the technical skills, like an understanding of computer science and coding, but also the understanding of the perhaps sector you're in. For example, if it's farming, having an understanding of agriculture, or fashion, a real solid understanding of the fashion industry and the skills needed to, make clothing and bring fashion to reality.
So, Lauren, it doesn't really change. So, I look at some of these, jobs of tomorrow and paradigmic drone program. And so I read all of your synopsis and I understand what it is. A lot of people at home won't. It's teaching drones to be vital assistance to rescue teams. But does it actually change what people should study at university? Or is it the same skills just applied in different jobs?
Well, I think having a solid understanding of computer science and really, machine learning and artificial intelligence really will enhance the skills for an awareness of the skills needed for future roles. So, for example, the paramedic drone programmer that you brought to life there, right? It has skills that require, coordination, medical knowledge, soft skills like problem solving, and having that mindset of thinking ahead and what does maybe the drone need in a certain situation, as well as hardware skills, understanding the components of the drone, as well as communication and calmness under pressure.
Okay, I love that. I mean, I think when I grow up, Lauren, I want to be a metaverse architect because it just sounds so cool on a CV. Do you have to be a Norman Foster architect, or do you have to be a coder?
Right, I think having coding skills is important, but also those creative skills that you can bring to life. really, even a real solid understanding of what's going on in popular culture, being able to bring together that, what's happening in society in the metaverse. So there's that creativity, but really having an understanding of artificial intelligence, as well as, if you want to go into computer science or programming, having those skills as well. But there's also skills around gaming and understanding how the gaming systems perhaps work, or systems engineering, as well as those key programming skills.
Lauren, what's an AI speech coach?
AI speech coach, great example of where someone would be teaching the AI, for example, as AI becomes more prolific in our society, teaching maybe different dialects to an AI system, encouraging the system to become more natural sounding and more relatable. So it's really working hand in hand with that AI system to bring a more natural response to the system.
Okay, I was a bit perplexed by the AI creative skills producer, but I would like to remind everyone that's watching at home, don't be freaked out. I mean, when you actually read some of the skills, it makes much more sense than just seeing the job description. Lauren, what's an AI creative skills producer?
And I mean, it's really taking the creative skills of the future, and maybe programming different shows, and having an understanding of how to bring to life different programs or different creative outlets, and again using AI to enhance or augment a show or a program.
So, Lauren, I mean, I guess the difficulty with some of these, right, and you talk about just the need to be the best in fashion, social media, music, sports, and healthcare if you want to get some of these jobs of tomorrow. But how difficult is the skill set? We talk about retraining, we talk about people being displaced and needing to find work because we have a skills shortage. How do you do it at Amazon? How do you find the right people with the right technology skills?
Yeah, I think, having the right skills and background and understanding computing and coding, as well as artificial intelligence and machine learning, having those skills enhances kind of roles that we already have, and looking at, reaching out to young people. We have our Amazon Future Engineers program, which is set to inspire school kids, particularly those from disadvantaged areas, to have a better understanding of computer science and artificial intelligence, and really just an awareness of computer science. Like, not everyone's going to be a computer programmer, but I think, AI and the future of tech really cuts across all sectors of our economy, and having that awareness and enhancing that understanding of what's involved in making these products come to life is important to us. And so we've aimed to inspire kids to kind of think about, okay, where is AI going in the future? We predict the AI roles could contribute over $71 billion to the UK economy, and jobs are set to expand by 40% in the next 5 years. And as you mentioned, there is that skills gap, and so we're looking to inspire school kids to really fill that gap in the future.
Lauren, at number 9, you have a community care technician, and this requires empathy, social skills, a caring attitude, and patience. Are we going to see more kids also studying, softer skills like that, but also philosophy? Again, it goes back to a question of morality.
There is that empathy. You need those social skills to be able to, bring that care to life, and then having, really understanding patterns in society and social engagement, and kind of what different maybe care spaces need. So you definitely need those skills. The soft skills are super important, right? We need empathy. You need the ability to organize a lot of data and kind of understand what's happening in the world, and be able to bring that care using AI to life.
Lauren, if you were to go back, I'm trying to think of what I wanted to become. Is there one of these jobs that you think you would have liked to do?
I mean, they're all really interesting. I think for me, bringing, these products to life kind of across the broad spectrum. But I am really passionate about the augmented learning technician, for example, and that's better understanding maybe where students are in their program and their study, and understanding kind of at the individual level where a student might resonate more with the teacher, and then being able to kind of extrapolate why that is, and then bring that across the whole of their studies. And so it's using the learning environment, really being connected to kids at the individual level. And then I am a keen teacher and learner, and so I love that space, and being able to use AI to enhance the learning process is amazing.
And that's brilliant. Lauren, thank you so much for everything. Lauren Kisser there, a technology director at Amazon. Coming up, first face-to-face appeal. Ukrainian President Vladimir Zelensky will make his first trip abroad since the war began. We look into the significance of this visit to the U.S. That's coming up next, and this is Bloomberg.
Is as safe as it was when you were in the government? It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful, because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime, but we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Ukraine President Volodymyr Zelensky will leave the country for the first time since Russia's invasion to meet U.S. President Joe Biden and address Congress in person. Meanwhile, the Russian gas flows are continuing via alternative links after an explosion at a pipeline that goes through Ukraine and supplies gas to Europe. Now, for more on both these stories, we're joined by Piotr Skolimowski, our Warsaw bureau chief, and Bloomberg's Oliver Crook in Berlin. So thank you both for joining us. Piotr, first of all, what is the significance of Zelensky's visit to the U.S.?
Hi, Francine. It's very important. Obviously, we're talking about the situation where 300 days into this war, and it's the first trip by Zelensky abroad since the war began on February 24th. He's just been visiting his troops in Bakhmut, which is far in the east, where the very significant fighting has been going on, and he's been handed this flag by his troops that he will now deliver to Biden, apparently. So he's going there, he's meeting Biden, and Biden is, from what we're hearing, is going to unveil a new package of aid to Ukraine worth almost $2 billion. And also announced moves to deliver Patriot missile batteries to Ukraine, which will strengthen air defense for Ukraine. Also, then it's obviously just a couple of hours of meetings, but then he's addressing, Zelensky will address Congress, where he's going to appeal for more aid, and obviously that's important because Congress is it's moving to the control of the House of Representatives, so will move to Republican parties, where some lawmakers are not really on board with unconditional aid for Ukraine.
So the war, Piotr, has continued for 10 months almost. Is there any sense of when it might end or where it's headed next?
At this point, what we're seeing, we're in a bit of a stalemate, which means the action on the ground has basically ground to a halt. Part of it is the conditions. It's muddy. You can't really see, don't expect any movement of troops right now. But what we're seeing is that the main cities, Kiev especially, are being shelled by Russia. That includes attacks by drones, which has crippled infrastructure. So most of Kiev is without electricity, with water is barely being restored. So we are at the point where Ukraine is worried that Russia is preparing a new assault. They've been sending signals that Russia is massing troops on the eastern part and might actually try to attack come January or maybe spring. This hasn't been confirmed by the Western intelligence, but we're definitely gearing up for something. We just don't know what it's going to be. Obviously, that means this war can continue. Although an interesting development today, the meeting with President Xi Jinping, Chinese president, and former Russian president Medvedev, and Medvedev heard from Xi Jinping that China wants peace talks over Ukraine. So maybe there is some hope there, but at this point, we're in a stalemate.
Okay, and Ali, thank you, Piotr. Ali, what has the war cost Europe in terms of energy?
So in terms of the war in Ukraine for Europe, it's been measured in bailouts, it's been measured in aid, it's been measured in energy prices that have absolutely skyrocketed, and it's been measured in hundreds and hundreds of billions of dollars. If you go just by market pricing, Bloomberg has crunched the numbers, if there was no aid from the state or anything like that, for companies and households, it would have cost this year $1 trillion. Now that doesn't take into account the aid that we have seen from governments, but that is what it would have cost if there had not been any help. And that doesn't take into account what governments have also had to do, which is bail out the likes of EDF and Uniper. All in through November, Bruegel estimates that governments have spent 700 billion euros in order to deal with this energy crisis. And going forward, this really speaks to how much money this is going to cost for European governments, many of which are already stretched. So if this goes on for over and over again, that $1 trillion is going to continue to add up, and it's going to have to be shared across industry, across households, and across governments. Just how is still to be seen.
So, Ali, what's the outlook for gas going forward?
So in the shorter term, it's all about storage and it's all about temperatures. The temperatures have come down. Storage is in decent shape. That you've seen natural gas prices come down as a result of that. But in the medium term, it's all about LNG and whether these cargoes are going to be able to make it to Europe. There's a lot of concern now that because of the price cap that Europe has put in, we're still some distance from it. But coming into next year, with China coming back online, demand for gas could go up to 7%. That's from one of the Chinese state-owned oil companies. That could come there if they're back at the table with a huge appetite. That is all going to be competing for the same LNG cargoes, which Europe is afraid that they may not be able to get their hands on.
All right, thank you both for joining us. Piotr Skolimowski there, our Warsaw Bureau Chief, and Bloomberg's Olli Kruk in Berlin. Now, coming up a little bit later today, we have an exclusive interview with Germany's finance minister. He's Christian Lindner. Don't miss that interview. Our Maria today will bring that at 1:30 p.m. UK time. Now, let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The European Union has approved Germany's nationalisation of Uniper with a long list of conditions. The EU signed off on a €34.5 billion rescue package for Uniper, the biggest in German history. But the gas company must sell power plants in Germany and Hungary, and the government has to reduce its shareholding to 25% by the end of 2028 to satisfy the Commission. Now, Nike's quarterly sales and gross gross margin have exceeded Wall Street's estimates. Global sales of the world's largest sportswear company rose 17% to $13.3 billion, beating estimates of $12.6 billion. Nike credited expanding digital leadership for the revenues. Gross margin fell to 42.9%, but that was still above expectations. Bloomberg has learned Deutsche Bank is considering giving some of its top earners over in Germany and other key markets an elevated salary increase to help offset surging inflation. Sources say base pay is likely to rise by as much as 4% on average. We're told it also plans to cut bonuses for investment bankers who have seen weaker performance. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Leanne Gerrans in London. Coming up, no early Christmas gift as strikes in the UK are set to continue in the new year. More on that next. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, unions have made a final plea for the Prime Minister, Rishi Sunak, to discuss higher pay settlements for workers in the NHS. That's as ambulance staff go on strike following industrial action by nurses. Well, joining us now is Bloomberg's Lizzie Burton. So, Lizzie, thank you so much for coming back on. I guess, you know, the problem for Rishi Sunak is that he's refusing to commit to greater pay increases for NHS workers, and so they're striking.
Yeah, and really, he needs to step up from being the Chancellor to the Prime Minister, so people say, because in the history of strikes, what happens is you negotiate and then the strikers go away. You don't give them what they want, but you meet them somewhere in the middle. At least this is what the nurses are arguing. They say until there's a negotiation, they're going to keep putting strike dates in the diary. At the moment, they're saying if you don't negotiate this week, we're going to have strikes in January. And the risk for Rishi Sunak is that this carries on going all the way to 2024 and it dominates an election like it did in 1974.
This is not about the economics, so it's about politics. So how does he navigate this?
Well, I mean, he's just making economic arguments. So he was at the Parliamentary Liaison Committee yesterday. His argument is that inflation is public enemy number one, that fighting it is not just going to help the nurses, it will help everybody, and giving in to the unions is only going to add to the problem. Now, we saw in the public borrowing figures this morning, it's the highest on record for November, even higher because of the cost of servicing that debt because of high inflation and high interest rates. That in itself was a record. So the government's argument is if we pay the nurses more, it's going to add to the borrowing or take away funding for frontline services.
Yeah, but frontline service, I mean, striking is really a disaster, especially over Christmas.
Yeah, and it was already an issue before the strikes. We had long waiting lists here, but now this is dangerous. These are dangerous times. So you've got expectant mothers told that they're going to have to not have home births because the ambulances aren't there to take them to hospital. People with heart attacks and strokes may have to wait to get to the hospital, and people with falls may suffer big delays. Now, the government says it's the union's fault if people die. The unions say it's the government's fault if people die. We really are in a crisis moment.
Yeah, we certainly are. Lizzie, thank you so much for staying on top of it. Lizzie Burden there with all the latest on the UK and, of course, some of these strikes over Christmas. This is a picture for some of the stocks that are moving the most now. We have 3 German stocks. We didn't do it on purpose, but actually a lot of the U.S. companies coming out with figures yesterday that beat expectations are having an impact on some of the bigger market cap companies in Germany. So Nike actually reporting some robust sales. That's giving a lift to Adidas, gaining some 8%. They were able to really put away some of the investor concern that Nike could not really continue growing sales as much as they have in the past, but they surpassed those concerns, and Adidas, do you see one of the biggest gainers? Then we have Deutsche Post. This is on the back of FedEx saying that their profit topped estimates as they were able to cut costs and increase prices. And finally, Uniper, the EU approving Germany's nationalization of 2 major gas companies with a long list of conditions. Uniper gaining 4.9% on the back of that. Now, Bloomberg Surveillance Early Edition continues in the next hour with Anna Edwards in New York, Ed Ludlow here in London. We'll have plenty more, of course, on market moves. We'll talk fully on Japan and beyond. This is Bloomberg.
To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but you know, some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Very soon we're going to be in negative year-over-year growth territory for earnings, and I think there's more downside than upside there.
Growth expectations for next year are not particularly vigorous. In fact, I still think the probability of recession is quite high.
Going into an expected recession, we've never seen corporate fundamentals to be better.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Ukraine's president is set for his first overseas trip since the start of the war. Volodymyr Zelensky will meet with President Biden and address Congress in Washington today. And Elon Musk confirms he will step down as Twitter's CEO as soon as a successor is found. The billionaire says he will still run the company's engineering teams. And a robust report, Nike posts another quarter of inventory build-up, but its sales and gross margin beat. Welcome to Bloomberg Surveillance Early Edition. I'm Ed Ludlow in London with Anna Edwards in New York. Matt Miller is off, and Kaylee Lines will be hosting the US Close Show later today. Broadly, Anna, risk on appetite in financial markets, although I would point out you get the sense that we're kind of creeping towards the holiday season when you take a look at volumes. We're kind of getting past the euphoria of that surprise from the Bank of Japan, but still much to discuss in the show.
Yeah, certainly that BOJ move prompting a lot of activity in markets yesterday. Good morning to you, Ed. Very nice to see you there in London. Let's have a look at the Asian session that was then, Ed. And you talk about things looking a little more risk on, and they do elsewhere in the world. The Asia session looking a little modestly, just showing modest moves, and those to the downside. So MSCI Asia Pacific down 0.1%. Here's where we saw all of that action yesterday, and a lot of action earlier on this year, of course. Remember, on dollar yen, we were up at 150 in October. We were up at 136, 137 just earlier on this week. But of course, the yen strengthening on that BOJ move to 131, and we continue to move around that particular target area. This is the 10-year yield on JGBs, and this is where we saw the BOJ move yesterday and widen that band. So to allow it to move up to 0.5% in terms of yield, you'll see we're at 0.48%. So not all that far away from the upper bound that the BOJ has set there. The market perhaps testing that a little bit, but they know that the other announcement important yesterday from the BOJ comes armed, and it has QE, and it seems as if it is using the tools available to it to make sure that the market doesn't test just too much. Iron ore is up by 2.7% over in Singapore. I put this in because this is reflective of the China story, the reopening story, but also some of the policy initiatives being used in China that will become important for the property sector. And there's a lot of focus on property, of course, as we know, in the Chinese growth story. On to US assets, and actually it was a better day for US stocks yesterday than we've seen in the last few days. So stocks closing in the green for the first time in 4 sessions, and futures reflecting that a little bit, up by 0.7%. So perhaps trying to move beyond some of the most recent hawkish shocks that we've got from the Fed, from the the ECB, and now perhaps even from the Bank of Japan as well. This is the 10-year yield. It spent a couple of days on the rise. You can see things have changed a little bit today, but those couple of days of moving higher for yields, leaving us at 3.67 right now. New York crude, WTI 76.92. Also a couple of days of consolidation around these particular prices, up by 0.9%. We had a report, of course, on inventory levels out from the United States yesterday. And Bitcoin at 16,871, not really moving all that much. Sam Bankman-Fried looks as if he's going to be moving, though, Ed, back to the United States, accompanied by FBI agents later today.
We'll move over to me in Europe. A similar story reflected here, that risk-on mode I was talking about, pushing higher in equity markets across most of Western and developed Europe. More muted gains here in London, up about 0.5 percentage point on the FTSE 100. We're seeing a rebound, particularly in rate-sensitive areas like in retail and other leisure stocks here on the continent. Flip up the boards, though, because what we really see broadly is a rebound on the Stock 600 Europe after the kind of surprise and euphoria I was talking about from the Bank of Japan, up 0.8% on the Stocks Europe 600. A big part of that, the surprise earnings out of Nike, driving some of those consumer and retail names here in Europe. Stabilization in bond yields, really a part of the story as well. But as I mentioned at the top of the program, Anna, we're just a few days away from the Christmas period, the holidays. There are lower volumes. I think last I checked, we're trading at about 75% of the 15-day moving average on the Stock 600 or Stocks Europe 600. And you look at the yields on major duration bonds, particularly here in Europe, and actually we are normalizing. Similar in the currency space as well. You saw euro-yen break through its 200-day moving average to its lowest level since around September, at one point August and Tuesday, but we've kind of taken a step back and we're relaxed. We're digesting if this really is the end of the era of negative rates. We can debate, you and I, Anna, what kind of a policy at all and how effective negative rates are, but at least from a standpoint of markets this Wednesday morning, we're hitting pause a little bit on all the excitement.
Yes, perhaps a little bit of a lull in things. It certainly was exciting yesterday from a macro perspective. Let's move on to geopolitics, because there's still plenty to talk about there, of course, Ed. And Volodymyr Zelensky will visit Washington today to meet with the President, Joe Biden, and address Congress. It's his first trip outside Ukraine since Russia's invasion. Joining us for more is Bill Farries, a Bloomberg editor who has extensive experience covering U.S. national security. Bill, thanks for joining us on the program. So what is Zelensky's goal for this visit? Usually when we see him addressing other political bodies, it's because essentially he wants their political and financial support.
He's flying into Washington just less than 2 weeks, really, before Republicans take control of the House of Representatives. Of course, he's been promised $2 billion more in military aid, including a Patriot missile battery that should help him better defend his airspace from Russian attacks. But this will give him a chance to really meet in person with Republican leaders who are going to have control of a lot of the purse strings in Washington starting in January. And the Republican Party has been split, but there is definitely a faction of it that has a lot of questions about whether the U.S. should continue to fund Ukraine at the levels it has. You've had some Republicans saying that they don't like the, quote, blank check that they feel Washington and the Biden administration have been giving Ukraine. He'll get to talk to some of those folks in person and try to make his case.
Bill, thank you for joining. I want to pivot to the other big story coming out of D.C., which is the House Ways and Means Committee voting to release Donald Trump's tax information to the public. What's the latest in our reporting? What is it that we think we will find out when those documents hit?
Well, we've also already learned quite a bit. The Ways and Means Committee issued a report from a nonpartisan group of accountants that suggested there were a lot of red flags in the documents to date that should have generated some kind of an audit. These include loans to his children that it's not clear if they were ever expected to be paid back. It includes charitable deductions that were not well documented, and other business expenses that accounting experts and tax lawyers say should have prompted an audit. In the coming days, we expect to see the actual tax returns from 2015 to 2020. There are some redactions going on for personal information, Social Security numbers, things like that. But it should be among the most complete pictures of Donald Trump's taxes that we've seen to date. And it's the kind of thing he's been fighting for years to keep out of the public eye.
All right, our thanks to Bloomberg's Bill ferries. Now, Elon Musk has confirmed he will step down as CEO of Twitter. The billionaire says he'll run Twitter's software and server teams once he's found someone, quote, foolish enough to replace him as chief. Alex Webb of Bloomberg Quick Take joins us with more. He will step down when he finds the right candidate. What else do we know?
Well, he will step down, but he also won't step down because, as you say, he's going to stick around to run the software and engineering, or the server and engineering teams. He had 7,500 employees when he joined. 5,000 have left. The 2,500 who were there, one presumes quite a lot of those are software engineers, hardware engineers, if it's for the servers. So he's still going to be running, it seems, quite a large chunk of the business. He's also going to be the person who is the controlling shareholder. So whoever comes in, he's likely to be breathing down their neck quite a bit, one can well imagine. Now, the thing is that he, and our colleagues reporting has demonstrated this, if you're CEO of Twitter, you've got to meet with brands, you meet with advertisers, you go out, you sell Twitter to the people who will ultimately be giving you money. The reporting from Bloomberg sort of suggests he's not been doing a brilliant job at that. That suggests that whoever comes in the door, you know, the Sheryl Sandberg type character is someone who's very well suited to this kind of role, is about selling Twitter to your potential customers.
Okay, Alex, very good morning to you. I really can't imagine a scenario where Elon Musk reports to somebody else running the business. Quite fascinating. What do Tesla investors make of all of this then? Of course, they have a vested interest here because they've seen their share price deteriorate, in part because many people think that the CEO of Tesla, Elon Musk, has been distracted by his Twitter activities.
Yeah, in a sense, like the Tesla story is far bigger than the Twitter one. It was an $800 billion company. It's now a $450-odd billion company. It's hemorrhaged value since Elon Musk took over at Twitter. And the past week has told a very interesting story. We saw the stock lose about 16% of its value the last literally the last trading week. Then it recovered a bit when investors saw that Elon Musk was looking like he was going to step down if you followed the results of the poll. Then yesterday's response that he would step down as CEO but still stick around at the company in a different role, well, we saw Tesla stock plunge again. It fell 8%. So, you know, this is the sort of background noise that actually, in a sense, maybe should be the foreground noise because it's a far bigger company, has far more employees. It's just that perhaps Twitter has broader social impact.
Okay, our thanks to Bloomberg's Quick Takes is Alex Webb. Now, in earnings news, Nike's quarterly sales and gross margin exceeded Wall Street estimates. Global sales at the world's largest sportswear company rose 17% to $13.3 billion, beating estimates of $12.6 billion. Joe Easton, Bloomberg's stocks reporter, joins us now with more. There was a pretty sizable reaction in after-hours trading. They kind of put a lot of emphasis on inventories, the idea that they're coming off a low base from a period a year ago where supply chains were in chaos. Now they're more elevated. What were the other takeaways?
Yeah, so it's really been a bit of a blowout quarter for the company. As you mentioned, their sales up 17%. The strong points in terms of geographies were North America, as usual, and also EMEA as well was pretty strong. The negative was China, which is still down, so sales were down around 3%. That's actually better than some analysts expected, but there were some hopes that that would improve even further. So there were some negatives, the discounting as well. This kind of plays into the whole consumers trading down situation we're seeing across retail, given the cost of living crisis. But definitely a very strong report, and we're seeing that spreading through into a lot of the peers in Europe as well today.
Yeah, so we're seeing some of the peers in Europe benefiting from the positives and not focusing too much on those negatives. Tell us a little more about those then, because of course we've been braced for negative themes, I suppose, coming out of this earnings story, as many people talk about the extent to which earnings expectations need to be downgraded for companies more broadly.
That's right. So a lot of the retail and even sports maker companies in Europe, those shares are down heavily this year, as you would expect, some of them down as much as 50%. They're gaining today. Puma, Adidas are strong points. And also what's probably more interesting to me is the retail companies like JD Sports and also Zalando in Germany. These firms have partnerships with Nike, which allow their customers to access products that would only normally be available direct from Nike. And Nike actually commented on those partnerships in their earnings call, saying this is really helping their European sales. So that's definitely a strong point. But as you mentioned, there are concerns going into Christmas that people are going to pick out the cheaper options for their presents, and that could weigh on possibly the following quarter's earnings report for those companies.
Joe, thanks very much. Bloomberg's Joe Easton joining us there with the Nike story and the read across into other European names that operate in a similar sector. Now we'll look at some of the stocks that are moving in pre-market trading here in the United States. And let's start with Tesla. Kathy Wood, some ETFs backed by the ARK Fund are loading up on Tesla stock, it seems, or at least buying a little bit more of it. And so as a result, we could see some movement higher in the Tesla share price. Or is this going to be a response to what we heard about Twitter and Elon Musk reducing his role there, if not entirely stepping down? FedEx in focus, profits topping estimates, higher prices. They're able to pass those through to customers. They're also cutting costs, of course. The share price looks as if it's unchanged in the pre-market, which perhaps a bit surprising. They did talk about package volumes dropping, and so maybe that's a negative to outweigh the positives. Also focused on Carnival Cruises then, Ed. This cruising business reports a little earlier than some, and so gives an outlook for the following year, and is going to be reporting before the bell today, so a big focus on what they can do. But just like Tesla, this is another stock that is down substantially. In fact, by a similar percentage year to date, down around 60% year to date, Ed.
God, I'd certainly love a Christmas cruise, believe me. Anyway, coming up, Joos van Linders, Van Lanschot Kempen Senior Investment Strategist, and on China's COVID policy, Catherine Bennett, Chair in Epidemiology at Deakin University. Plus later today, an exclusive interview with the German Finance Minister, Christian Lindner. That's at 8:30 a.m. in New York, 1:30 p.m. in London. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Ed Ludlow in London with Anna Edwards out in New York. I want to jump straight into my Bloomberg terminal. The headline of the last 36 hours is the Japan 2-year breaching that threshold, going above zero, just, very just. The other point of discussion, Anna, is this global era of negative yields ending. This chart shows that the pool of global debt with sub-zero yields down to about $686 billion. But a year ago, we're at the 11 trillion mark, which shows how quickly this picture has changed. And all that's left in that basket, in that dump of negative yielding debt, is short duration JGBs. So we're still euphoric. The market's a little more muted this Wednesday, but it's still our main point of discussion, which is fortunate because Noor Al-Ali, our Bloomberg Markets live editor, joins us here in London. There's a lot going on. I think, you know, let's be honest, that volumes are a part of the factor this Wednesday, but what do you see in markets as a sort of ongoing reaction to that surprise BOJ action?
Absolutely. I mean, you've touched upon a really big theme here that we're going to start talking more and more about into the next year. You know, that end of, sub-zero rates here is a big moment for central banks, for inflation. What it indicates, though, is that inflation is probably going to stay a bit higher. So, team transitory, probably not in the really good graces right now, but also we're looking at a really important theme from this year that's being tested as well, and that's King Dollar, right? So as the yen, pressed through the highs yesterday, we saw the dollar weaken a bit, and we saw that kind of, risk aversion almost, fade, and we're seeing now that risk positive momentum really carry through. Now I'm gonna caveat this by saying we're in holiday seasons markets. If you look at this really cool function at my screens right now, it's AVAT. For the stock 600 index, you'll see that actually the average volume for this time of day is about 30% less than normal. So my understanding is traders, not most of them are at their desks at the moment, but this is a thing that they're definitely going to look at coming into the next year.
And from that, Noor, good morning, good to see you. From that, I wonder what happens to the balance between stocks and bonds next year. A lot of people talking about the attractiveness of bonds if we start to have conversations really increasingly dominated by recession risk, Noor. That could be something that pushes money into bonds and then obviously pushes up the price, pushes down yields. I wonder what that does to the pile of negative yielding debt, but that's for another day.
Yeah, absolutely. And I mean, first of all, it's nice to see you in New York. You're usually sat here right next to me. The thing here is really a focus on the 60-40 portfolio. We've been talking a lot about that. Bonds have had probably their worst year among their worst years in recent decades. So did stocks, and that's been a very interesting theme this year. But look, that's been mostly linked to that dollar haven status. You've had yields rising because central banks, particularly the Fed, have been pressing on with their inflation flight. Now we're seeing a bit. Where a lot of people are saying, well, hold on, we could see that haven status being restored for bonds. Maybe stocks, we're not really so sure. We can see them probably rising. So there's a lot of question here, and we're really reconsidering some of the trading themes that we've seen this year and wondering how long they're going to last into the next year. Now, the 60-40 portfolio is probably where it's going to come out. Whether or not there's going to be a supportive environment for bonds really depends on whether the Fed pivots or not, and that's another contentious debate that I don't think we'll have much time for as well.
Okay, you can have that, Noor, over the festive season and into the new year, and we'll continue to have it back here on set in New York and in London in 2023. Noor Al-Ali, thank you very much for joining us this year and no doubt into next from the Bloomberg Markets Live team. And remember, if you want up-to-date market analysis, you can join the Market Live team with their blog. MLIV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
No one covers the world like Bloomberg.
My team thinks 2023 we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A
piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
The markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in New York with Ed Ludlow in London. Now, keeping you up to date with news from around the world, here's the first word. A U.S. House committee has voted to publicly release Donald Trump's personal and business tax returns from 2015 to 2020. It caps a 3-year legal saga initiated by Democrats to obtain and release the former president's closely held financial documents. The vote comes in the waning days of the House Democratic majority and follows Trump's referral for criminal prosecution by another House panel, that just yesterday. Now, today, federal authorities will whisk Sam Bankman-Fried to the United States to face a range of criminal charges related to the collapse of the FTX crypto exchange. Bloomberg has learned the FTX co-founder will sign a set of extradition papers today at a Bahamas court and take a non-commercial aircraft back to the United States, escorted by FBI agents. UK government borrowing surged in November, with the budget deficit coming in at £22 billion. That's the highest monthly total on record and almost triple last year's figure. Public finances have come under mounting pressure from rising debt interest payments and the huge cost of subsidizing energy bills. And an estimated 4 million people packed the streets of Buenos Aires for a parade honoring Argentina's World Cup winning football team. So many people turned out that Lionel Messi and his teammates were forced to fly overhead in helicopters rather than travel through the crowd in an open-top bus. The president's office confirmed the players were flying over the crowds with the roads clogged due to what they called an explosion of happiness. Well, that explosion of happiness, Ed, has certainly been lasting a long time on the streets of Buenos Aires. I understand they've been partying since Sunday.
Yeah, and quite right. First World Cup title in 36 years, a country that's feeling economic pain, inflation, tight capital controls. There were videos on social media and reports of fans jumping off bridges, trying to land in the open-top bus just to get 30 seconds with Lionel Messi. I love football, Anna. I don't love football that much.
No, I don't think you'd jump on the top of a bus, even if it was for Chelsea.
Even if it was for Chelsea and our mortal enemy, Lionel Messi. But I'm happy for the people of Argentina, certainly.
Right, coming up on the programme, we will talk markets. Joost van Linders joins us. Van Lanschot Kempen, senior investment strategist. He'll be with us. We'll take stock of what we've learned from the BOJ this week and how much that is changing the narrative into 2023, or is it just adding more to the previous stories we were telling? That's next. This is Bloomberg.
invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at the 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and will continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition, and here is what you need to know. Ukraine's president is set for his first overseas trip since the start of the war. Volodymyr Zelensky will meet with President Biden and address Congress in Washington today. And Elon Musk confirms he will step down as Twitter's CEO as soon as a successor is found. The billionaire says he will still run the company's engineering teams. And a robust report. Nike posts another quarter of inventory buildup, but its sales and gross margin beat. Welcome to Bloomberg Surveillance Early Edition. I'm Ed Ludlow in London today, where Anna Edwards, who curiously is out in New York. Matt Miller is off, and Kaylee Lyons will be hosting the US Close show later today. We are limping, I think it's fair to say, Anna, towards the holidays, but there is still a risk on appetite in markets.
Yeah, limping to the upside, I suppose, if you like. Yeah, limping in the sense that maybe volume's not what they would be normally. We are used to that this time of year, but yeah, we do have that sense of approaching the holiday period, into the holidays and into the new year, but we're doing it in some style, some positive style. We have US futures pointing a little bit higher this morning. S&P futures up by 0.7%, and that's following a decent session on Wall Street yesterday, actually. Stocks on Wall Street closing, or the S&P closing in positive territory for the first session in 4, coming as a bit of a positive. And that's despite the fact that we've seen yields going higher. So for the last couple of days, we've seen yields going higher. Things looking a little bit different this morning, but 3.68% is where we stand after we heard from the BOJ yesterday, and that caused a lot of people to think about how much money might leave treasuries, head back to Japan, more of an incentive for Japanese investors who are so active in US and European bond markets to put that money back home. New York crude, WTI, $77 a barrel right now is where we trade, up by around 1%. So also a little bit of risk on coming through there. And Bitcoin, pretty flat this morning, 16,876. The story, of course, around crypto, the one that people are talking about, even if it doesn't move markets anymore, is what's happening with Sam Bankman-Fried. And he's going to be coming back to the United States today, we understand. Let's have a look at some pre-market movers then, Ed. And we have Tesla in focus once again. I feel like this is always one of our pre-market movers. It does have that air about it. Up by 2.5% on Tesla this morning. Is this to do with the Twitter story and Elon Musk saying that he's going to be, staying with the business but not being CEO? He'll find somebody else to do that job and he'll do more of the engineering side of things. Cathie Wood is also adding to her holdings in Tesla amid growing criticism, or despite that criticism of Elon Musk. Also FedEx in focus, up by 4.2%. We didn't have much movement on this one last time we checked, but now it is moving higher. The company topping estimates, higher prices. They're able to pass those on to customers crucially, and they are cost cutting. They did report a decline in volumes, but that does not seem to be weighing on sentiment around the business this morning. And Carnival, the cruise business, up by 2.4% this morning, reporting earnings before the bell. And Ed, this is an interesting one because of the timing of the release we get from Carnival. Apparently it's one of the first cruise those businesses to give us an outlook into the next year, or at least opens the window further into next year in terms of its outlook. Ed, what do you see in Europe right now?
Yeah, the equity story here in Europe is really a rebound in those rate-sensitive sectors. You look at the Stock 600, up 0.9%, almost a percentage point. That, of course, driven by some of the feel-good that's come from Nike earnings. You look at names like Adidas, Puma, also making gains early in the session. Also a stabilization in yields, of course. We're getting over that news from the Bank of Japan earlier in the week. You look at the German 10-year Bund at yield around 2.3%, UK 10-year gilt 3.6%. We're taking a time out, as you said, Anna. We're kind of limping to the upside in terms of this risk-on mentality we see across financial markets. Less activity. We've certainly hit pause in currency markets. Just 24 hours ago, we kind of broke through this long-standing 200-day moving average for euro-yen to a low of around September lows, August lows, but now we're essentially just static, and we're waiting to see actually if there are further surprises from the BOJ to come in the weeks and months ahead.
Okay, so that's certainly the focus of the markets right now. Let's get to a conversation about the markets with Joost van Leenders, who joins us. Van Lanschot-Kempen, Senior Investment Strategist. Joost, nice to have you on the program once again. I want to start with the BOJ because it's been so topical, such a big deal this week, essentially, and the impact on global investing and global assets, because there is this argument that if Japanese investors have more reason to bring their money home, higher interest rates anticipated now in Japan, then we might see flows leaving US Treasury markets, US stocks, European bond markets, for example. Is this something that's going to have an impact on your asset allocation into next year?
Yeah, as you mentioned, it had an impact on markets. We also saw obviously a big shift in a big rise in 10-year yields in Japan, close to the new target of 0.5%. But also US yields going up about 10 basis points as a reaction. Yeah. The BOJ really presented this as a sort of a technical issue to improve the functioning of the bond market and the corporate bond market and the transmission of monetary policy. But markets interpreted it as a more hawkish shift, clearly after the Fed and after the ECB came with their hawkish surprises the last week. So that was a big thing that markets had to digest. So when you look at our asset allocation, we're cautious. One reason is the growth slowdown that is being partly induced by the central bank tightening. And yeah, I think although as I said, the BOJ presents it more as a technical issue, we think there is more to it than that. You also saw the expectations for rate hikes coming in Japan. Yes. So in that sense, it fits the pattern and fits one of the reasons why we're a bit cautious in our asset allocation still.
Okay, yes, and it certainly fits into the global pattern as you set out, Joost. In terms of that slowdown that you mentioned and central banks inducing the slowdown, do you think where do you see central banks blinking first? Which of the global central banks do you think will be most spooked by the slowdown that is of their creation?
Yeah, I would say the ECB, but it's interesting. Maybe it could be that the Fed will pause before the ECB, and then it's not so much blinking. It's more that they've sort of achieved their peak rate, the rate that is enough to slow down the economy and bring inflation back. So we see that the signs of inflation starting to fall in the US. So I wouldn't say that that's blinking. It's more like they achieved what they want at some point. For the ECB. It's interesting because I think their forecasts that they presented in the latest meeting are too optimistic. It's a very, very shallow recession that they have, but they're quite, you could say, pessimistic on inflation, that's more sticky. So if that recession is a bit deeper and inflation comes down a bit more, then yeah, they could blink in that sense. They've said that they will hike rates for a couple of more times, 50 basis points. Yeah, if the economy really slows and inflation falls, then right. They might backtrack on that. But the tone was very hawkish, and Lagarde was clearly on a mission to increase the expectations among investors for what the ECB is expected to do.
Joost, good morning from London. We talk about blinking, we talk about tone from central bankers. Part of the discussion now, moving it forward from the Bank of Japan, is on communication and trust. We have a story on the Bloomberg terminal. BOJ credibility questioned as traders test Kuroda's new 50 basis points red line. What is your takeaway on that issue of communication and trust? Do you see kind of other central banks being almost, I guess, inspired by the move that Kuroda and co took?
Well, I think when you look at Japan, even in Japan, we see that inflation is increasing and wages have started to increase. So you could say that the extremely monetary policy should be shifted at some point. I think it was expected more in spring, maybe the successor of Kuroda taking that decision and the wage negotiations. So yeah, I think it makes sense in terms of credibility. Yeah, you could say that the credibility of central banks was undermined because of the stickiness of inflation, and that they're trying to regain that credibility. I don't think it was under so much pressure. When you look at inflation expectations, especially the longer-term inflation expectations, they never got out of hand. So in that sense, I think the credibility was still okay of central banks. And yeah, also the Bank of Japan had to move at some point, and they decided to do it a bit earlier than expected, but not really unexpected in the sort of longer term view.
In your most recent communication, you wrote to clients that the job is not yet done for the Fed, for the Federal Reserve. What is the job to your mind that is left to do?
Well, I think what Chair Powell basically said is that everybody's focusing on headline inflation, and he's focusing much more on underlying inflation and on the labor market, and that underlying inflation is more sticky. You know, the services sector inflation, which is more impacted by the labor market. We had wages actually accelerating. So yeah, the job is not done. There will be a couple more rate hikes. I mean, we're getting quite close, but not fully there yet. And so one message that he gave is the peak, which is a bit higher than everyone expected. And the other one is, of course, how long they will stay there. And there's a big gap between the Fed and the markets. There can be. I mean, a year is long, so having a big gap at the end of the year, markets may be right.
Right.
But
and crucial to
now the message is that there will be some more rate hikes.
And it's crucial to understanding that gap is perhaps different expectations about how quickly inflation comes down, whether it stays at an elevated level. And with that in mind, I was drawn to some interesting data on the US housing market yesterday. US rent inflation slowing sharply, a new index being built by the Fed, which looks specifically at those new rental agreements. So rental agreements agreed just in the last months, rather than very old ones, and suggesting that there is a lot of downward pressure there. I wonder if that gives us a sense of policy already enacted now having an effect.
Yeah, on the housing market, definitely. I mean, rents coming down, but you see, we had home builders conference this week, which fell further. Sales are down about 30%. So the impact on monetary policy there is very clear. I mean, Powell basically divided up inflation in sort of 3-4 components. One is goods inflation, which is coming down, actually falling now. The prices are falling. Then you have energy, of course, which is falling. You have rental inflation or housing costs. There, Powell also acknowledged that private sector rents are falling, and that will feed into those numbers. And then you have the rest of core services inflation, which is over half of PCE inflation, and that's where Powell's concern is at the moment, and where he wants to see more progress. So he also sees the other components falling, but the message for now was, yeah, that's not enough to pause, and certainly not enough to pivot.
Okay, a pause and a pivot, not enough yet. Joost, thank you so much for joining us. Joost van Lenders from Van Lanschot Kempen with his thoughts on the markets, the Fed in amongst that, of course. Now, coming up on the programme, we'll talk about China's COVID policy. Catherine Bennett joins us, Chair in Epidemiology at Deakin University. We'll get into that conversation with her shortly. Professor Deakin waiting to give us her views on what China is up against right now. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Part of what I love about business is you get to build things from nothing.
I don't have any investors. This is all money in. This is me just building it.
It's pretty much full-service shadow banking with nobody in charge.
This is Bloomberg Surveillance Early Edition. I'm Ed Ludlow in London with Anna Edwards in New York. Chinese workers with mild COVID are being told to go back to work as the country reverses its stringent COVID-0 regime. That's as authorities narrowed the definition of a COVID death, prompting concerns Beijing is looking to downplay the death toll. Joining us now is Catherine Bennett, Chair in Epidemiology at Deakin University. Good morning to you, Professor Bennett, and thank you for joining us. There's a concern here about the spread of COVID-19 across the country, principally first. Second, a story on the Bloomberg that's just crossed, worries emerging about the emergence of a new variant because of that spread. What is your analysis of both of those threats?
Well, we've got 20% of the world's population that hasn't been part of that community-wide transmission that we've seen across the globe. So adding that many people into the mix does help accelerate that risk of new variants coming along. We haven't had a shortage of them. There have all been subvariants of Omicron to date. The concern is that we might yet see something that's a bigger shift away. So the more infections, the more that might impact. But having said that, 80% of the world's population has been having serious waves of infection throughout 2022. So, we're adding 20% more in. It's significant, but it may not make that much difference. But the other concern about new variants is the potential for recombination between coronavirus that's live in animal species, particularly wildlife, that could cross into and recombine with human coronavirus. And of course, now that we're heading into, for the first time, the entire global population having the human coronavirus circulating in the sorts of numbers we have, that does increase that risk also of recombination and the formation of new variants that are a step change away from others, just as we see with flu. So that's the concern now, particularly in Asia, where there has been a history of these combination events because of the population size and also the way farming is done with domestic animals, pigs around the home and so on. Though some of that is now changing, which might lower the risk.
So we keep in mind worries about new variants emerging, and you've set out some of the ways that can happen, Catherine. Very good to have you on the programme. Can I ask you for your thoughts on the type of, the size, the scale, of the death toll that we might see in China? And crucially on that, what reference points, what geographies are you looking at to help inform just how many deaths we might see? I mean, some people look to Australia and because of the way that it so effectively controlled the virus in the early days and then reopened. But it seems that what's happening in terms of reopening in China is so much faster than what happened in Australia.
Well, in some states in Australia, it was equally fast. They went from zero COVID, they'd avoided Delta, but opened just when Omicron was sweeping through. So they did see those first big waves. But the fundamental difference between China and other countries that practice COVID-0 successfully is the vaccination coverage in the population. And it's not just the proportion vaccinated. By the time Australia opened up, we were moving into the booster doses, which were very important for Omicron. But we had over 95% of the population, the at-risk population, vaccinated. And we know the rates aren't as high in China. The other thing we don't really know in China is the effectiveness of their own vaccinations against Omicron. We know that the attenuated virus vaccines they used were not as effective as the mRNA vaccines in particular, but even AstraZeneca on some of the previous variants. But with Omicron itself, it's not really tested in a country with COVID zero. The countries that China supplied the Sinovac and other vaccines to were countries that now have hybrid immunity. They have gradually built up that protection from infection as well as the coverage with vaccination to ease that transition. In China, you have a population with very low infection rates by all counts. And so that's going to be the big transition going into a serious wave. And the final thing to say in the comparison that's a challenge is China is opening up now when there are multiple variants around. And that poses a different challenge to the health authorities in trying to contain spread because it increases your risk of reinfection.
We're trying on this program, Professor Bennett, to understand logic behind policy, right? You know, we think about here in the UK where I am, living with COVID. How does a policy like living with COVID compare to COVID zero? What is it that you think authorities are trying to achieve with the actions they've taken?
Well, COVID zero, certainly in countries like Australia, was it was a heavy suppression policy put in place until we could build the vaccine protections to allow a safer transition. And by all accounts, that's worked for us. If you compare us to countries like Canada and Denmark that weren't able to close their borders but had similar control measures in place throughout, we had, you know, half the death toll per capita of those countries and significantly less than other countries that had much more wide transmission, including the US and the UK. So it did help us transition. We now, of course, see death rates. We had a difficult year in 2022 with that transition to community-wide spread. But at the same time, our high vaccination rates did protect lives. And so we've transitioned to a point now where we are comparable to other countries, but without the total loss of life at the same level. China, if they actually did as well as Australia in terms of that vaccination protection and getting antivirals out to try and reduce the number of people who need hospitalizations in this surge that they're now moving into, they would still be expecting nearly 1 million deaths because of the sheer size of the population. But the worry is that it will be overwhelming, and if the vaccines aren't as effective and their coverage isn't as high, particularly in the older, vulnerable population, that it will put more pressure on the health services. That will cause more people, for other health reasons, to not have good health outcomes, and that could escalate quite quickly. So that is the concern that you know, it's not going to transition in the same way.
Yes, I know. I saw 2020 data suggesting 48,000 ICU beds. We'll look for more up-to-date information, of course, as the pandemic continues in China on that and how it is coping. Catherine Bennett, thank you very much, Professor at Deakin University. Thank you for joining us. Coming up on the programme, we'll run you through some of the key events to watch out for today. Markets a little quieter than they were yesterday. Thankfully, perhaps. This is Bloomberg.
CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in New York with Ed Ludlow in London. Now look at what is ahead today. Ukraine's Volodymyr Zelensky will meet with President Biden and address Congress in Washington. Sam Bankman-Fried will be flown to the United States from the Bahamas today to face criminal charges linked to the implosion of FTX. More data from the US at 10 a.m. with existing home sales and consumer confidence numbers. We've talked about weakness in the housing market earlier in the program. And after market close, we'll get earnings from Micron. Investors bracing for a poor set of results, perhaps there. The stock down 45% this year. One of the big stories we've covered this hour then, Ed, has been around Twitter. And I know that, it's very lovely to see you in London and co-hosting with me this morning. But you spend a lot of your time tracking these tech names over on the west coast of the United States. The Twitter story overnight, we've actually learned quite a lot about the financials. Elon Musk going some way to try and justify the big cost-cutting plan he introduced.
Yeah, Musk was on a Twitter Spaces, and he basically explained that had he not cut costs, the company would have had negative cash flow, essentially, of $3 billion next year. For me, what was insightful is that he said they will have $3 billion of revenue, which if you look at the Bloomberg data before they were taken private, they were on track for $5.3 billion of sales this year. It shows the drop, the pullback that advertisers have had.
Yeah, he also, yes, and on that subject, he said that advertisers are asking tough but sane questions. As Alex was saying earlier on, perhaps there have been questions about the ability of Elon Musk to address advertisers and their concerns.
Well, money talks, doesn't it? And clearly he's very focused on the tech side of this business, fixing the underlying software issues, but money is king.
Yeah, he wants to focus on that in the future as well, so stepping down from the CEO role, but still remaining with the business and focusing more on the engineering. Ed, it's been very nice to see you this morning. Thanks for joining us here on Early Edition. This is, that's the end of Early Edition. Surveillance is ahead. They'll be hearing later on in the day from Christian Lindner, Germany's finance minister. This is Bloomberg.
successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It's clear that Bank of Japan is going to hike next year.
It's the end of an era, and investors have to get used to higher interest rates across the curve.
Eventually, this is going to bite, and inevitably, when the recession comes, spreads are going to widen further from here.
The global economy is likely to be heading into a recessionary path.
I think we're in a rolling recession, or we're going to get one. That's a dual cycle.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
It is the end of an era. It's my last show.
Ever?
Of 2022.
Woof.
See you in 23. He was getting excited. Live from New York City this morning. Good morning. Good morning with Tom Keene and Lisa Abramowitz. Welcome back, Lisa. I'm Jonathan Ferro. Equity futures up 0.5% on the S&P 500. TK, we can finally talk about some company earnings. FedEx, Nike in the mix this morning.
I'm glad you lead with this. We'll do a lot in Japan here. We're going to talk about the show yesterday and the path forward for Japan. But you're right. There were some earnings, and I looked at FedEx very carefully, the guidance ballet, but, you know, the stock's pretty much unched. I mean, it was like, okay.
You want the good news? It wasn't a repeat of September, because September was pretty brutal for this company.
Yeah.
Although, if you look under the hood, it was fascinating. They raised costs and they cut costs. They raised prices and they cut how much their expenses were. Volumes were down. This doesn't necessarily indicate a healthy economy. What it indicates is, to your point, Tom, companies adapt and adjust, and what adapting and adjusting means is cost cuts and higher prices.
Can I anecdote here? The cardboard box pile up outside my walk-up, I've never seen it.
This is a major data point for you, isn't it?
It's got to be 30% bigger than the pile last year.
It's that time of year, though, Tom. The boxes arrive.
But I mean, anecdotally, I'm with Neil Dudd on this. Is Dudd on today? I think he darkens the door.
8:15 Eastern time.
He darkens the door. That'll be good.
To Lisa's point, though, you can say the same thing about Nike, I think. Another inventory build-up, which may be of concern to some economists out there. Perhaps that feeds into this idea that you get more goods disinflation, but at the same time, sales profit better than expected.
So consumers can spend. They are being perhaps a bit more cautious with how, and yet a lot of these companies are still able to raise prices. Again, it flies in the face of the narrative that there is some sort of bigger concern.
And Nike up more than 12% this morning. We'll pick up on that story a little bit later. Futures right now up 0.5% on the S&P. Here's the price action for you. What day is it? Wednesday morning?
It's
Wednesday morning.
Stay focused, John. Stay focused.
It feels like a Friday, Tom.
It does.
Your 10
For
year,
you, it's a Friday.
367.87.
I mean, it's not.
Yields unchanged in the FX market. Euro dollar negative 0.1%. 106.16. I noticed in Japan, Tom, the 10 year getting close to that upper limit of the band, getting close to 50 basis points.
Well, all of our team yesterday was yeoman's duty on talking to you about this historic moment for Japan. I think it sort of dawned on the American financial media through the morning and even into yesterday as well. And my major message there, John, is there is follow-through this morning. There's a dawning awareness. This was a big deal. And as you mentioned, yen comes in stronger right now through 133, through 132, 131.85.
Lisa, the Japanese 10-year. 0.47% this morning.
I just found this story fascinating. I'm sure we'll tease it out throughout the day, but some of the biggest moves that we've seen this decade, not only this decade, but since 1998. All right, here's what we're looking at today. 10 a.m. we get November U.S. existing home sales, as well as December Conference Board consumer confidence data. How much do we get a sense of the slowdown in the housing market? The data has been somewhat mixed, actually, of late, although existing home sales already at the lowest going back to May of 2020. Can it go much further? Today, Sam Bankman-Fried has agreed to be extradited to the U.S. The expectation is he will fly back accompanied by FBI agents, and then the hearings begin about what his guilt is and whether he will serve potentially the rest of his life in jail. And at 2 p.m., President Biden is greeting Vladimir Zelensky, the president of Ukraine, on the South Lawn of the White House, 4:30 p.m. press conference. Vladimir Zelensky is asking or expected to receive $2 billion as well as certain weapons, a system that to me is going to be fascinating to see, John, how much they get some of these high-tech missiles that can potentially blow Russian missiles out of the air to defend themselves. Do we find out more about what the strategy is heading into the winter?
Hey, Lisa, thank you. Thank you very much. Fantastic to have Lisa back. TK, there is a belief, reports out there, that this meeting doesn't take place without a big deliverable.
Yep.
And that deliverable this morning is expected to be that Patriot missile
I
defense
would spell
system.
it Patriot as well. It's a good morning for Raytheon. I've been informed by people way in the know on this. There are different kinds of Patriot missiles, and you've got to wonder which ones were delivered to them. They're what they are, but they're maybe not the most sophisticated ones.
We'll get some detail from AMH in about 10 minutes' time down in Washington, D.C. Joining us now is Brian Weinstein, the head of fixed income at Morgan Stanley Investment Management. Brian, your words this morning. Risky assets are overly optimistic that the Fed pivot will come before the pain. Brian, is that optimism misplaced?
Yes, I think it's misplaced. I don't think it's wildly misplaced. I think people always get images of 08 in their heads, but the market always wants the easier path, and it's not that clear to me it's coming. That Fed statement, now maybe overshadowed by the BOJ, was very hawkish, and I think the pivot will come next year, but not until risk assets have given up a little bit of the gains we've seen them make. It's already started in equities.
Brian, what's 60-40 do this year? One of the great hallmarks of the last 24 hours is awareness equities and bonds tanked. Bonds have to come back. Is it a year of clipping coupons, or can you find total return?
I think it's a year of clipping coupons plus a little bit. Like I'm not a big believer we go back to 250 on 10-year notes, or that the Fed eases right back to zero. But I do think the income opportunities out there are real. So I think you get income. I think when you can buy 10-year notes in this kind of 375-ish range, you can get income plus a little bit more. So I think it's a decent year for 60-40. It may depend more on equities than bonds, but I do think the income part of bonds will do very differently than it did last year.
I think I've got a good understanding how CFOs react when we had the incredibly low yields, money for nothing, money free, and we saw, these hilarious bond tranches by tech companies. What does issuance look like when money actually costs something?
Issuance slows down a little bit. I mean, again, I think it depends how quickly the Fed pivots. One thing risk assets may be telling us is that they can hold out a bit, right? No one has to refinance at 10% on high yield bonds. Well, some folks do, but most don't. If you can wait a bit and rates normalize and spreads are okay, you can refinance it 6-7%. So you don't lever up as much, you don't borrow as much, and so I think issuance will pick back up, but it's not the same as when rates were zero, right? The 0.25 tranches or under 1% tranches were just too good to be true for companies. I don't think that's coming back.
Brian, throughout this year, people were talking about the risk factor that China would reopen, it would cause more demand and more inflation, and that the Bank of Japan could potentially drop their yield curve control pegs, and that would cause massive disruption and much higher yields. Both things appear to be having hints of happening, and yet this market is chugging along. Yes, there was a bit of a disruption yesterday, but not as big as many people would have expected. What do you make of that?
Yeah, at least I was surprised yesterday. So you look back and wonder why, right? Yeah, back when the UK mini crisis was happening and yields were spiking, that kind of price action was what people expected when Bank of Japan did this. Now, if you look at their yield curve, other issues, you could argue that the market had sniffed it out, right? There were issues that were trading reasonably higher than the peg, and so maybe it was just more in the market. But maybe at least what it tells me is that we've seen our highs in yields unless we have some other shock. If you had told me just what you said, that China was reopening more and that Japan moved their peg and that 10-year notes went from 340 to 370 and they'd been 4.25, I would have yawned, right? It's not the story that people want it to be. So either the market's asleep and it's quiet, which I guess is possible in December, either that or the market has sniffed it out and it's in the price already and we're moving on to something else. It's very interesting to me.
I would agree with that, especially because the theory was that Japanese investors had piled into U.S. Treasuries and would withdraw completely and go back home as soon as there was a sense that there could be a free-floating type of bond market. Granted, they haven't done that. They've just adjusted the yield curve control sensibly. Do you look for some other indication that we have seen the peak in yields, that this isn't necessarily going to be another shoe to drop? Or do you think that the jury's already come back with that verdict?
No, listen, again, I definitely lean towards the fact that we've seen the highs in yields because, again, I think you look what the bond market's telling you. It's telling you the Fed is going to win the battle against inflation. It's telling you growth is falling, not disastrously, but definitely going low. And the Fed told us that where their prediction is for next year. So there's a lot of reasons why we're looking through this maybe and into lower growth and lower inflation. So yeah, it kind of gets rid of your list of what you thought might drive yields higher. I think you'd have to see GDP numbers surprise consistently to the upside, and a Fed that's good. Maybe they don't have to go to 6%, but they could stay at 5% all next year, and then you have to reset rates higher again. But I don't think we're going to have that information for a while, and I'm actually not convinced it comes.
We want all the excitement up front, Tom, all at once. It takes time. You've got a new band. You've got a new upper limit to that band is 50 basis points. We've got to see if that gets tested, the upper limit of the band in the next couple of months and when Governor Kuroda exits and someone new comes in.
Yeah, I agree it takes time, and it's also about flows. It's not just an interest rate analysis. It's about what do the Japanese do with a huge amount of cash abroad. Some really smart notes over the night, rather. I like what George Saravello said about yen strength from this wall of international money that will return to Japan.
We're going to catch up with Eric Nelson of Wells a little bit later. Yeah. $125 yen, that's a major call.
Yeah,
125 from where we were pushing 150.
On a nonlinear basis, it's amazing. What do we do after 125? I mean, I don't see people really framing out 118, 115, 110, but I would suggest it's nonlinear, and the easy move has been made 150 to 131.
Brian, can I squeeze this in just quickly? I want to talk about Europe. We've talked so much about the BOJ in the last 24 hours and what has or hasn't happened with JGBs. The Italian 10-year before today was up more than 50 basis points, the 2-year rather, over 4 sessions. Not just the Italian 2-year, the front end of Germany, the 2-year there up almost 40 basis points over 4 sessions. Brian, these are real moves. For people talking about the end of the shift higher in bond yields, what's happening in Europe?
Yeah, no, Europe is interesting. I mean, a very hawkish ECB and an ECB that really controls a lot of those bond markets. So you hear a lot of things about, what if the Japanese investor stops buying treasuries? I'm fairly confident the treasuries will get funded. They're liquid. The world's benchmark, whether it's good or bad, is a different story. I think where you can see more trouble is in the risky assets in Europe, where the markets haven't functioned as well, where the ECB has been a bigger player, and so you have big moves there. But it's not as obvious to me that those moves are over.
Hey, Brian, this was great. Fantastic to catch up. What a move from the BOJ. Unexpected going into the new year. Brian Weinstein there of Morgan Stanley. Take a look at these scenes in Buenos Aires. 4 million people descending on the capital of Argentina, hitting the streets, Tom. There was meant to be this open bus tour parade of the World Cup with the team. That got abandoned pretty quickly, and the players had to move to helicopters to complete it because that open-top bus couldn't move. Tom.
And it's Wednesday, and am I right, John? They're playing their real job, their day gig on Monday or Tuesday?
Premier League.
And European...
Commences again, Monday.
Like PSG's not in the Premier League, right?
No, that's the French league.
Do they play each other? That would be fun.
That's
like
in
Liverpool,
like the Champions League. You're describing the Champions League.
Is that still going on?
You've just reinvented the Champions League. That continues.
Okay. I think I like Premier League better than World Cup.
You prefer the Premier League?
Is that like odd?
No, there are some people that think the actual quality of the football might be better at the club level, at the
That's how I felt.
upper tier of club football.
Even better, there's no
Champions
Fox
League, for
announcers.
instance. Oh, we can talk about the ratings. The ratings are in. I'll bring those numbers next. Eric Nelson's coming up shortly, 7 a.m. hour, so in about 45 minutes from now, on this BOJ decision. He's got things to say.
The EcoFlow Delta.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. President Biden will unveil nearly $2 billion in assistance and announce moves to deliver a Patriot missile battery to help Ukraine bolster its defenses this winter. The U.S. State Department says Iran's shipments of drones to Russia for use in the war in Ukraine is transforming relations between Tehran and Moscow into a fully fledged defense partnership. Ukrainian President Volodymyr Zelensky is traveling to Washington today to meet with Biden and also address Congress. It is Zelensky's first trip outside of Ukraine since Russia invaded back in February. Now, Chinese President Xi Jinping has told former Russian President Dmitry Medvedev that his nation would like to see talks on Ukraine. The remarks come as Beijing tries to improve ties with Europe. State broadcaster China Central Television is reporting Xi told Medvedev that his administration has been actively promoting peace and also talks. China has avoided criticizing Russia over the war in Ukraine. China has confirmed it has narrowed how it defines a COVID death, counting only victims who tested positive for the virus and then died of respiratory failure. The decision adds to speculation that China's low official tally is hiding the true picture of the chaos unleashed by this month's abrupt pandemic pivot. The entire country has reported fewer than 10 deaths this month. Global news 24 hours a day. On Bloomberg, I'm Leanne Gerrans.
Shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. The top names at the Fed are on Bloomberg.
I do see growth slowing, but remember that's part of the mechanism of getting demand into better balance with supply and alleviating those price pressures.
We're clearly not in a recession right now based on the data. It is an economy that is growing only modestly, and I think it's an economy that's really seeing the imbalances between supply and demand diminishing and inflation coming down.
Nobody covers the Fed like Bloomberg, your global business authority.
What are the real needs of the country right now? Making sure the Defense Department can deal with the major threats coming from Russia and China. providing assistance for the Ukrainians to defeat the Russians. That's the #1 priority for the United States right now.
President Zelensky heading to Washington, D.C. That was Senate Minority Leader Mitch McConnell from New York City. Here's the price action for you on the S&P 500, snapping a 4-day losing streak in yesterday's session, just about. Equity futures right now up 0.5% on the S&P. In the bond market, yields unchanged at 368. Tesla up by just 1%, was up by more than that on the month so far. With yesterday's losses of 8%, we're down by 29% month to date on that stock, Tom, with all this speculation swirling as to what will or won't happen with the leadership over at Twitter and ultimately what it means for the leadership at Tesla.
I'm glad you bring this up, John. We got to get to Anne-Marie here, but what do they do today? What does Tesla do today after the price action yesterday?
One report just came through from Electrek, Tesla to implement a hiring freeze and another round, a new round of layoffs, Lisa. So these reports keep coming through, but Ed Ludlow's been talking about this. I think investors of Tesla would like to hear from the company, and not just these reports from different media organizations. They'd like to hear from the company directly at this point after the weakness we've seen, particularly over the last month.
Who's running it day to day? Are the concerns that you're seeing in stocks truly due to anything fundamental with how the company is being run and with respect to some of the demand issues that you're seeing over in China in particular? Or is this due to potentially some risk tied to Twitter and Elon Musk's focus there and what the collateral could be of Tesla shares for some of the Twitter loans?
I think the question that Ed and I have been exploring, and others as well over the last couple of days, last couple of weeks, do you have a leadership problem over there or just a macro problem? And does the stock have a leadership problem or just a broader equity market issue? Because I go through the names. Listen to this. Meta year to date, down 65%. Apple's down about 25%. Amazon's down 49%. Google's down 38%. Microsoft is down 28%. A lot of these big names, big tech names, if you want to call Tesla that, maybe you don't want to, but a lot of these names that have had weakness off the back of higher interest rates, they're all in the same grouping, aren't they, year to date?
You could say that, but if you look at the actual correlation of the price action to some of the drama around Twitter, the correlation is pretty direct. So there is a question about the reputational risk, and Dan Ives, I know, has spoken with you about this as well. How do you tease out the man from the company if the man has really represented and sold the company and really created the fan base that drove Tesla to what it is?
Well, Dan's super bullish on the stock still, Tom, and Dan's been pretty clear. He wants Elon Musk out of the Twitter situation and focused on Tesla. I think that's going to be difficult to make that happen, even if he steps down as chief twit, as he calls himself over at Twitter, and then install a new leader, because he's still going to be heavily involved, Tom, in that company.
It seems to be a lot of damage, is how I'd put it.
Particularly over the last month.
You know, I talked to our head auto guy at Bloomberg News, and he was heated here. The competition coming Tesla's ways is huge. Like 20 cars.
Sure, and look at the manufacturers.
20 varied cars.
Look at the American car manufacturers this year.
Yeah.
They haven't done well either. Those stocks are really suffering.
They don't have Teslas on the back of Patriot missiles. Let's get to that. Anne-Marie Horton gives us a brief this morning. This is really interesting. Each missile is well in the X number of millions of dollars. They're on the back of a truck. They take a lot of staffing. They're fancy. And, of course, the memory of the Gulf War when Raytheon launched these what are considered wonder missiles by defense experts. Anne-Marie Horton, how many of those missiles will Ukraine have?
We're still getting details on exactly what will be announced. We do know that the president is going to be announcing that they are sending these Patriot missile batteries to Ukraine. Ukrainians will be the ones that are staffing them. They're U.S., according to a senior administration official who briefed us reporters last night with the news that President Zelensky will physically be here in Washington, D.C. today. The fact of the matter is, they said they're not changing their policy of troops on the ground, but Zelensky has been pushing for more high-level defense weapons, and he's getting them today.
Will those missiles be able to land in Russia or take out missiles launched from Russia?
I think the idea is that these missiles are defensive. And right now what you have seen, and this is why Zelensky has been pushing for it so much, is really a barrage of missile and drone attacks on critical Ukrainian infrastructure. We've talked about it a number of times. Many analysts have said it, and it is playing out every single day in Ukraine. Putin is weaponizing winter. He is really starving civilians of the power and the energy that is needed. And this is something that is critical, obviously, in the very harsh, cold cold winter months in Ukraine, especially eastern Ukraine, where the fighting continues. And that's where Zelensky was yesterday. So, Tom, these missiles, the hope for the Ukrainians is that they'll be able to shoot them down and directly hit Russian aircrafts and missiles.
Anne-Marie, we've heard about Patriot missiles being delivered to Ukraine for a bit now. Why the significance, why the importance of Vladimir Zelensky coming in person to Washington, D.C. to meet with the president and lobby the cause?
So this is incredibly significant, and to be honest, I think many, including myself, were in shock. He's leaving a war zone. He was just in Bakhmut, a really central area of Donetsk, of fighting just yesterday. He was handed a Ukrainian flag by the soldiers there, and actually he alluded to his trip, and many didn't see it, saying that he is going to pass this on to U.S. Congress and the President of the United States for their support. It is coming at a critical time. I've mentioned once because of obviously the weather. Ukrainian officials have also been telling the press that they do believe that as soon as January, maybe February or March, if it's later, that Russia will attempt a fresh take on Kyiv, especially from Belarus. This is on the heels of President Putin being in Minsk just earlier this week on Monday. And then second, this is really Zelensky's appeal at a joint session of Congress this evening to Republicans that are taking over the House that have said they do not want a, quote, blank check in terms of funding to Ukraine.
Right now, we're also hearing about Xi Jinping meeting with Medvedev of Russia on the other side, urging for talks, urging for peace. How does the U.S. give aid to Ukraine without seeming like they're moving away from that kind of reconciliation and being more antagonistic than defensive?
Well, I think the United States has said constantly nothing about Ukraine without Ukraine, so they would welcome peace talks if Putin was going to leave Ukrainian soil, as Zelensky has said. The U.S. has always been sending funding. I don't think the Patriot missiles or the extra $2 billion funding nearly $2 billion the president's going to announce today, has really changed that calculus. This is something that they have started since February 24th when Russia invaded. What is interesting is China's tone yet again shifting slightly, and directly to Dmitry Medvedev. He is the former president of Russia, and what Xi Jinping is saying, and this is almost an olive branch as well to the Europeans and to the United States, is that China wants peace and they want talks. And he's saying this directly in public to, really a key Russian player, maybe not so much inside circle of Putin yet, but he was Russian president when Putin stepped down and became prime minister for those few years.
Mate, just quickly, you were at the G20. It feels like to me that since the G20, there's been a real shift from China, just in tone with the rest of the West. What happened over there?
So you're 100% right. There has been a shift in tone. Still, China has not come out and condemned the war. But what they have done is they've signed on to the communique that said most of the countries at the G20 are against this war of Ukraine. They allowed that line. They didn't name which countries were there, but China allowed that. And China has continuously said they do not want to see a nuclear war. They do not want to see nuclear weapons being used. Obviously, this is something that Putin has continuously flirted with in terms of his language of maybe digging into his nuclear arsenal. China is questioning, without directly saying it out front, Russia's plans. And we also saw that moment as well when Putin said to Xi, I know you have some questions and concerns.
AMH, down in DC. Anne-Marie, thank you. I think we can all feel that shift, Tom, since the G20 in Bali from the Chinese leader.
Oh, yeah.
There was a feeling going into it that China might be isolated by the United States and other nations, and that just didn't really take place.
I believe it's winter in China. Can you imagine the weekend that the president faces?
Have you heard from President Xi on COVID?
No.
Nothing. Tumbleweed.
But I just like to get to Monday in China, I would suggest it's a medical challenge.
I hear you. On some of this, Christian Knowlton, the Chief Investment Officer over at Deutsche Bank, Private Bank.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Wednesday morning, every day this week's a Friday, isn't it? As we approach Christmas Day, Tom. Just, you know.
Would you like to leave an hour early?
I plan to leave about 30 minutes early.
Brianna up at WCVB just showed Logan Airport in Boston, and it's like, you know, the holidays started.
It's getting busy.
Packed.
Amazing.
You know, Lisa and I can do this, you know.
I'm confident you can. I'm confident you can go solo, Lisa.
Do you like my coat?
We don't want you to go.
I got people on radio talking about my coat. I wore this for you. It's my festive, you know.
So what's with that? What's the story behind that?
It's a festive coat. I was with Christine Lagarde, and she was doing the houndstooth thing, and she said...
And she said, great idea, it will strobe on TV.
Yeah,
it'll really
that's
work.
great. It works out well.
Merry Christmas.
No, on my return monitor, it's not strobing, but I'm sure there's someone at home that's just seeing these.
Yeah, we're waking them up. I was going to wear my Christmas sweater, Lisa. It has the ISLM aggregate demand, aggregate supply geometry on it.
That's
yeah,
fantastic.
with lights.
Yeah, exactly.
With lights blinking on.
Have you actually got one of those?
Yeah, I do. And then, you know, after the fifth mince pie.
Oh, mince pie.
You know, there's a supply shift.
I'm sure you're about to say something.
There's a supply shift.
I think it was martini.
The ISLM.
Mince pie.
Supply shift.
If everybody's gone, is everybody kind of scrambling to get back because the year didn't end because there are these random shocks?
No.
Okay.
It's year over.
When are we back all together?
2023. Early January. Can't wait. Equity futures right now on the S&P. Positive by 0.5%.
It's the most disingenuous can't wait ever.
Everything I say is genuine, all right? I mean it. It's truthful from the bottom of my heart.
Oh, dear Lord.
If I can find it. On the NASDAQ, up a third of 1%. In the bond market, 2s, 10s, and 30s look like this. Your 2-year, just some fantastic calls from Mike Schumacher of Wells Fargo yesterday. He's got 2-year nominal yields. He thinks in the next few months we can get back to the high 4s. Right now, the 2-year, 423.38. He thinks on a 10-year, the 10-year can get back to 425. He thinks real yields are going higher as well. So it's a big call from Mike Schumacher, and hopefully Eric Nelson can touch on that a little bit later, Tom.
Lots of nuances as well. I mean, there's just no question about it. Christian Nolting with us, with Deutsche Bank, along with Michael Schumacher, and so much of this is just the different views, particularly institutional quiet money views. Christian Nolting joins us right now. Christian, I just want to know what 60/40 is going to do next year. I mean, the serious quiet money, John Farrow's 401k is blown up to smithereens. I mean, how do we get back?
Well, I think a very good question, actually. And I think what we have seen today is that the so-called traditional asset classes 60/40 have been going in the same direction, i.e. down. And I could imagine it's staying the same direction for next year, but slightly up. So we call it a little bit the recovery of the 60/40 probably for next year. Why? We think there is a recession both in the US and in Europe. From that point of view, we think yields could go lower from our perspective, so that would be positive, of course, if you look at the return. And on equities, we are also cautiously optimistic, especially in the second half of the year. So maybe from that perspective, it's not too bad as this year, maybe.
What do you see from the huge sell-side analysis in your internal corporate analysis, not only Deutsche Bank Europe, but Deutsche Bank Global? What is the tone of corporations, this after we saw Federal Express and Nike in the United States?
Well, I think it probably the next year could be really split in two halves, right? As we're going for a recession, I think companies are also cautious. And from that perspective, you would see also the next earnings season, i.e. from Q4, then in January, that there's a bit more cautiousness that could weigh on markets from that perspective. But I think in the second half of the year, as I mentioned, if we are behind recession and we are not going for a long-dated, many-quarter recession, then the outlook should really improve, and maybe a bit earlier even, so if the market is discounting that. So from that perspective, I talked of this two half of the next year.
A lot of people are talking about the two halves of next year, and that kind of hinges on the weakness coming through in the first half of the year. What are you looking for to determine whether the thesis is accurate in terms of the earnings disappointments, in terms of the response in markets?
Well, we look especially of earnings expectations, right? If you get the real numbers, you always have to check what the market has been thinking. The good news, in a way, comparison to last quarter, now earnings expectations have come down a bit. I think that's honestly a positive sign. But if you're right with the recession, then probably we have to lower this a little bit as well, or the market has to lower earnings expectations from that perspective. And so I think that's important on the one hand. And then if you look top down from the macro perspective, of course, you look where inflation is stabilizing or is inflation really turning. And I think the Fed has said it. They will want to see not only one, let's say, spot, they want to see 2-3 consecutive months of inflation coming down. I think that's, from the macro perspective, very important to watch.
Here's what's really frustrating me, Christian. Everyone's coming on and saying this. So it seems like lower earnings expectations are pretty much baked in. People are saying they're expecting lower lows so that they can go in and buy, so that they can enjoy the second half and see those gains. And they're expecting some moment of panic. Except we've seen all of the panic instruments, at least that people were putting out this year, from China reopening to Bank of Japan potentially changing their yield curve control. What will it take to surprise what is a consensus right now of a lower first half and a better second half?
Well, I would say, honestly, I'm not thinking we are going into a panic mode. We have been saying there is a recession quite early, actually. And if that's the case, yes. But we have also been saying that this recession won't be last for very long. And not sure we really see the lows we have been seeing already. So I think we also agree with that we can see a lower market. But I think then we have to be very disciplined and say if the outlook is correct, that there's not a long recession, then we need to use it as an opportunity. And I'm sure if everyone sees the market coming down, it will not happen, right? We know that.
Look, Christian, I've been reading a note here while Lisa's talking from Dana Telsey, who's acclaimed in retail, and it's on Nike. And to me, Christian, it looks like a repeat of the quarter before and the quarter before that. And you've been great about this, measuring, it's just not going to be as gloomy as we see. Let's take one company in America. Granted, it's a fancy brand. And should I ask him if it's Adidas or Adidas? I don't think we'll waste time on that. The Christian, the basic idea here is, are we overdoing the gloom? Dana Telsey really pushes against that this morning with Nike.
Yeah, I think people are surprised if it's not that bad. As I said, we are not forecasting a deep and very long recession, but let's not be too optimistic, right? I think the environment is going to be tough. And from that perspective, we should really be not too optimistic and say, let's forget about this, everything will be fine. It will not be. I think it will not be an easy year, but there will be opportunities. And to answer your first questions, Adidas, from Adidas.
Clearly.
Thank you. See, I'm learning every day.
I like to adapt to my surroundings. I call it Adidas while I'm here. But back home,
that's fine.
You're very flexible.
And I would also say in the UK, we used to call Nike Nike.
Really?
We called it Nike growing up, yeah.
Interesting.
But I've adapted here too, and I'll call it Nike, mainly because people don't understand me when I try and buy clothes and shoes and stuff like that.
Christian's like, why am I doing this?
What a Nike.
Christian, seriously, what's the value of cash with all this? I mean, you guys are pretty optimistic, and, I'm there. But what do you do with cash that actually has yield?
Well, actually, look, for a long time, I can tell you here in Europe, right, we had a lot of cash on the accounts because there were negative rates and we could avoid them for the clients if we have them on our discretionary accounts. Now we've moved the cash into short-dated bonds because now you earn something there, which is a massive difference. So year and this year, clients will see much lower cash positions than they have had seen last year. Still, I think we can, if we look at money market funds, we are still ready to deploy them probably in the first or second quarter of next year, given the view we have.
Given that a lot of people are talking about this, do you see another rise in rates, especially based on the latest moves, the hawkish move from the ECB and what happened with the BOJ?
We do see a slight rise in rates because I think inflation will be sticky. So everyone is talking about inflation to come down, which we agree with. And probably we've seen the trend changing in the US already. Maybe in Europe it's coming only, maybe next month, maybe in February. But I think the market is then too optimistic that there's only a downway to a very low level. We think inflation will be higher. And I think once the market is realizing this, we could see slightly higher rates. But again, as I said, it's probably still interesting to go in the fixed income space because we don't see not by far the same move as we have been seeing this year, which I think is not a difficult forecast to be very honest.
Christian, this was fantastic, sir. A happy New Year to you and have a wonderful Christmas. Thanks for joining us. Christian nodding there.
Same to you.
Deutsche Bank with a beautiful German backhand there. Just fantastic.
Yeah, it's Adidas. Just to let you know.
I love that. Do you know, it's got a great outlook. Marco Purvis of Tallbacken has got a fantastic
read every
outlook.
word like 3 days ago.
So you talked about that first half, second half story. Marco's having none of it. Year end 23, 36.50. He's looking at the structural disinflation of the last decade. Think tech, think globalization, replaced by the structural inflation perhaps of the next decade. Think reshoring, capex discipline, energy, mining, all of the above, and tight labour markets, Tom. And that's the sticky inflation call that Ilarion was making with us just yesterday as well, looking ahead to next year and beyond.
I disperse it down to where Stuart Kaiser is. I think it's the smartest note I've seen in 72 hours.
Over at Citi.
Citigroup. It's real simple. What you just said is a narrower group of successful companies. And it's not my job to pick those names, but fewer will win is where I am.
And it's not going to be big tech, which ultimately is the call that
Some
Savita's
big
making
tech
over
will
at B of A.
win. Some, by definition, somebody's got to win, but many will lose.
Well, Savita
And I don't
over
like
at
the
B
way
of A is making a point, Tom, that it's about outdexing. It's not about indexing. It's not about sitting there at the passive level in a market cap weighted S&P 500 because she just doesn't believe that tech's going to repeat the gains of the previous decade.
It's not our job to give opinion on this, but is this finally the year or the era where active begins to compete? That's the real question.
Ramo, how many times have we heard that?
I know. I struggle with the idea of what does active mean? Are you talking about just factor-based
That's
investing,
really
or are you
important.
talking about specific security selections? There's an issue with that. There's also an issue, though, right now with the idea that everything is getting re-rated with suddenly this idea that money isn't free, and that's a complete stock reevaluation if you see that stickier inflation. That has not been priced into the market. Right now, equities are expecting some sort of return to a low-rate environment, and a lot of fixed income is as well. And that is one of the biggest question marks of next year.
Mohammed said yesterday on the program, we're not going back to it. We're just not going back to it. And the greatest message I got yesterday was that it's the end of free money, and it started with Japan and it ends with Japan. And that's why that move yesterday was so important. We're working our way out of 20 years of this, and we're seeing that happen in a big way in the last year.
You know, there was an article that I read this morning that when the Bank of Japan came in there to buy bonds, usually people are like, oh, here they go again with this. It was welcome this time because they were wondering when a buyer would actually step in because everyone wanted to sell at a time when there's a question about the need for yields to go higher.
I'll be quick here because we're not doing math today, but I want to be careful about active and R-squared analysis. I mean, the idea is an index fund's at 1, and if you're 0.92, you're a fake index fund. I'm looking at ARK Investments. This is worked out.
How's that getting
The R-squared is a 77.77. It's down 66%, 12 months trailing. So you got to be careful about treating all active the same.
Can I just tell you my favorite moment of the morning was when you said, you know, while Lisa was talking, I was reading a note about something else.
I was listening.
I mean, come on, the research is coming in. We're still getting.
I was listening. For what it's worth.
No, but the research is coming in real time.
No, it's
morning.
true.
People are working.
Are they?
Everybody but you, John.
Hey, Tom, I love my job so much.
You got your bags
this is
down
never
here.
work. This is never work.
Yeah, you got
This
the
is a treat.
matching. You got the matching luggage.
But if the people signing the check are listening, you know, I still want to be paid for this, of course. You know, there are expenses.
Oh my God, the sarcasm.
8:30 Eastern Time. This is a conversation you do not want to miss. The German finance minister, Christian Lindner, sitting down with Bloomberg's Maria Tadeo. TK, to your point, year's not over for the Europeans. There's a lot of work still to be done.
It is. It'll be an important conversation.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. A U.S. House committee has voted to publicly release Donald Trump's personal and business tax returns from 2015 to 2020. It caps a 3-year legal saga initiated by Democrats to obtain and release the former president's closely held financial documents. The vote comes in the waning days of the House Democratic majority and follows Trump's referral for criminal prosecution by another House panel. Now, federal authorities will whisk Sam Bankman-Fried to the U.S. to face a range of criminal charges related to the collapse of the FTX crypto exchange. Bloomberg has learned the FTX co-founder will sign a set of extradition papers today at a Bahamas court and take a non-commercial aircraft back to the U.S. escorted by FBI agents. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Leanne Gerrans. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of a solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority. Of politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Look at the consumer spending. How are they spending? They're using credit card debt, and we're seeing that grow on a double-digit pace over year over year. The consumer, if you look at confidence as well, that's also been a big disconnect. Consumer confidence has been very weak for very long. Typically has some correlation with spending, and we haven't seen that yet.
That was Megan Horniman there, the Verdance Capital Advisors Chief Investment Officer, catching up with us just yesterday. Let's get you up to speed. On the market right now, equity futures look like this on the S&P 500, positive 0.5%. We have a little bit of a lift in and around 4K, year-end next year. I put out the forecast a little bit earlier this morning. Deutsche Bank's at the top, Binky Charter, 4,500 on the S&P. Greg Boutel at BNP Paribas, here's one for you, 3,400 year-end, 2023. So that's your range, that's your high. And that's your low from Deutsche Bank
there's lots
and
of
to
we
BNP.
believe.
I'm sure there's always a lot of we to believe. Because when I put out that tweet this morning with the 23 forecast, I also linked to the 22 forecast, and a lot changed, didn't it? We had a war in Ukraine. The Federal Reserve went way more aggressively with rate hikes than many people anticipated in 2022. The top one last year, and I don't mean to pick on anyone, so I'm not going to name the firm. No, I will. Oppenheimer. 53.30. 53.30 12 months ago looking out. 12 months, yeah, it was rough. And at the bottom, Morgan Stanley 4,400. So the bottom call
was higher than where we ended up.
The bottom call at 4,400 on the S&P from Morgan Stanley is just about the top call for next year for next year on the S&P, which is Oppenheimer at 44 and Deutsche Bank at 45.
Do you think that people use these truly as trading instruments
Nope.
to understand what the
That-
consensus is, what the range of thought is? And right now, the consensus is the first half and the second half. And we just heard Christian Nolting there saying if everybody thinks it's going to go down, it'll go up.
No, I'll say this.
The other way
I think
around.
for one, it's about finding out and working out what the consensus is and deciding whether you want to lean against it. But the strategists that make these calls, they'll say their best guesses. They don't really enjoy making these calendar-based guesses by saying, yes, this arbitrary point at the end of the calendar, this is where I think the market's going to be. And I'm hearing from many, many strategists, including Savita Subramanian at Bank of America, who are actually choosing to de-emphasize their index level call and basically trying to tell us that the bigger call is beneath the surface, it's elsewhere, and it's not about an index call on the S&P 500.
That's what you do after a year that harkens back to 1974.
Oh, sure, it's been difficult, Tom.
The place has been blown up. No question about it. This is a joy to bring you someone steeled with retail experience. Anisha Sherman joins us now with Bernstein. Double degree Wharton, Kellogg, all the rest of it, forget about it. She enjoyed the trenches at Ross Stores with a real job before she ended up in securities analysis. Anisha, thrilled that you're with us. Your note on Nike seems from another planet. Your optimism on their view forward is extraordinary. What does the Gloom crew have wrong about the American consumer buying Nike shoes?
Thank you for having me on. So the negative sentiment around Nike going into this quarter was all about the next kind of 3 to 6 months. It was about inventory, North American promotions, the pace of China recovery. If you fast forward 6 months, the brand is stronger than it's ever been. It has more customers, more sales, more distribution points. It is number one in every market in the world. It continues to hold on to its number one China position, even despite everything that's happened in the last 2 years. And we saw evidence of that in the print yesterday. I mean, we're talking about a cautious consumer, but Nike did 30+% constant currency growth in EMEA and in North America in this quarter. Now, some of that was lapping a softer quarter last year, but, it still shows resilience. It was number one on Tmall in China. There is a path to recovery. So
Right.
I think the gloom and doom is very short term. And if you skip forward the short term difficulties, this is a really strong stock. And the stock usually does well in a recession, coming out of a recessionary environment. So long term, I am very bullish.
Anisha, the gentleman from Argentina wears Adidas. The gentleman from France, he have 3 goals, wears the Nike Zoom Mercurial Superfly 9 km soccer cleats. Do people buy the product? Do they see unit sales because their heroes still wear this stuff? Is that still germane?
Yeah, actually, I mean, they highlighted, they did not mention Argentina's win, but they did highlight Mbappe's boot, the Mercurial, as one of their best-selling products. It's not just the football boot, it's also the kits, it's also the merch. So it does drive a huge amount of, kind of merchandising sales, and both Nike and Adidas, because of this big final, will have benefited from that.
As you say merch, I see Tom's eyes light up. He wants merch, and he's been asking for merch for a long time. And
I went to the Tots, and they were sold out of all the Nike stuff. John showed me the store on the way out, and I was ready to low. I got the Sun jersey for Mrs. King.
Try getting the Messi jersey now.
Yeah, forget about it. Yeah. Well, I will say that there's a question about whether, Anisha, this is a Nike-specific story and a hero-specific story, or whether this is a broader retail resilience and the sense that people are going to keep buying. There was a lull, and then people will go back to the brands that they know and love.
No, I'm not that bullish about the broader consumer environment. I think there is a softening, and you see it in the traffic data. You see it in the guidance of many of the companies who just come out of a wave of earnings. And though performance in the current quarter has been strong, the guidance has been a lot more cautious across the board, except for the very hard value retailers. And the hard value retailers, I cover the off-pricers, they did terribly this year, and they're much more bullish about next year. But the mainstream and slightly premium retailers are facing the opposite issue. And, when you look at Nike's guidance, despite the strong performance this quarter, they only inched up their guidance a tiny bit because they are being cautious on China and on North America in particular.
How much do you see consolidation right now, Anisha, around the strongest brands? This idea that we've been waiting for this washout in retail for so long, and suddenly we might actually see something more like the wave of consolidation, the, if you will, Tom's phrase, zombie roll-up that a lot of people have been looking for in this sector.
We see it every time we come out of a recession. So if you look at the numbers coming out of the GFC, Nike was the single biggest share gainer in North America. If you look at the numbers even more recently coming out of COVID, 2019 to 2021, Nike was the single biggest share gainer. And the share losers are the tier 2, tier 3 brands. Some of them closed down stores, some of them shut down entirely. So there is a share reallocation, and being the biggest in the market gives you that outsized benefit when you get your fair share. So I expect it to be more coming out of rather than going into a recessionary environment. But yes, I mean, that's part of the reason why in the sportswear sector, strong brands do better, because they tend to consolidate share over time, particularly when the market is coming out of an area of weakness.
Anisha Sherman of Bernstein. Anisha, thank you. Just wonderful. Amazing how these things work. I sat next to Jamie, my producer, this morning, and Jamie said, for the kids, and I hope the kids aren't listening at the Berlin household, they wanted Premier League gear. They wanted the football shirts. They wanted the Messi shirt after watching a World Cup. One tournament, they want their parents to go out there and spend. Do you know what it was for me? 1995, George Weah, red Diodoras, the most beautiful football boots I'd ever seen.
I remember those,
I was dying for a pair. Couldn't get a pair. They were too expensive and they were difficult to find.
They were beautiful.
I'm thinking of, I don't even play football anymore.
I know, I knew
and
it.
I'm
I knew this was
thinking of
coming.
buying myself some red
Mbappe.
Diodoras.
Do you know
George
red
Weah
Diodoras?
was just a god to me.
No,
growing
I
up. It was just a
remember
phenomenal football
Lisa, they
player.
were so well made. They looked like something you see in that little alley in Venice off the square where all the fancy stores are. They didn't look like soccer shoes.
They just used to be black football boots, and then everything changed.
Yeah.
All these colours started, and for me, George Weah was just sort of at the forefront of that.
Do you know it's a thing?
Glad you showed up today, Lisa.
I am. Do you know it's a thing that when you become an adult, you buy the gifts that you wanted when you were a kid, and that's what actually this is the biggest growing trend in toy purchases and all sorts of things.
Didn't we write an article on that here at
Yeah, we
Bloomberg?
did.
I saw the same
But
thing.
adults are actually the biggest drivers of a lot of these toys.
This is why I've got this Formula One car
I know,
at home
exactly,
now.
that's
Remote
what I'm
control.
saying.
I'm so happy
How
with
big
that,
is it?
by the way. It's about this big. It's about this big. It's about this big. And you've got this remote control, which looks like a Formula One steering wheel.
As a furniture.
It's so cool.
Could it take out your Christmas tree?
It did
The
last
aluminum
night. No, it did when I was
plastic
playing with it
tree,
yesterday.
and it
It did,
took
but
out
it
the
didn't.
tree?
It didn't take it
It
down.
didn't tip it over.
No, because it's too low down.
You're not
Tom.
so lucky. You still have to depend on the squirrel to keep going up
I
and
said
down.
last night, I said, the tree is so good. There's such gorgeosity here. I mean, I got the little fertilizer in it and all that. I said, we got to keep this puppy up through March.
Is that how you
Oh,
decorate
that
the
was
tree?
well greeted.
I remember a tree of yours many years ago that was left undecorated.
Oh, yeah.
Through Christmas.
Yeah, we never got through it.
It was
Yeah,
left
it's
in
like
the
we were
corner.
traveling or
in
something.
the corner and never
Yeah, it's true.
decorated.
No, that is a true story.
This is at the old place.
Yeah, we were like,
I remember that.
You know, it was on the 6th floor. We moved down to the